And we're live, I think. So welcome back to the Capital Mindset Show, everyone. Today is going to be the Friday live stream. I'm going to be killing, I guess, several birds with one stone. I know that, I usually do the live stream, or try to do one of the live streams on Fridays. And I told you guys that I'll also do a Friday video covering something akin to the news, something like that. So with that being said, I'll start off by just reading off the beginning comments, and then we'll get into the show for today. So, of course, we have the celebratory Reui, sorry. And then would love to see how Fabio fare against other stock YouTubers. Like, what do you mean? Like in some sort of battle to the death? What does that imply? I don't really know what that means. But anyways, so today we're going to be first talking about, I guess, and this, think of it like it would be another video. And then towards the end, I'll kind of answer questions if anyone has any questions. But so again, you would normally get this in video format. You're just getting it in live format. I usually do all the videos off the cuff anyways, so it should be the same. But pretty much we have Millennial Money closing down. You guys have already seen that. So that's kind of news that happened at the beginning of this week. They came out with their last video, and it said, our last video, not clickbait. So if you haven't seen, oh, by the way, thank you, JP. Actually, you're bringing this up. So you probably have noticed that I've improved the thumbnail game, so to speak. So it's because I requested, or I have assistance now, you could say, with technology. So anyways, that being said, I want to actually show you guys something that's pretty interesting. Again, this is the drama-filled portion of the video. Of course, we can talk about it, but let's see here. So desktop. So we do see this actual comment. So they did actually respond. Let me go ahead and take the liberty of zooming in and bringing it onto this comment. But if you read this comment, you've probably already seen this. Other people probably have talked about it as well. They said that they didn't receive any sponsorships. However, other YouTubers have actually found out that they have in fact had sponsorships for a very long time, and also they weren't monetized. So it's not really. It's like a play with words there. I get why they're saying this. And 101 replies, probably some. I don't know. Oh. I know who that is. But anyways, that's actually funny. That's the first comment that we see. So all in all, I think it's good that the podcast is, well, let's see how long it lasts for in terms of how it's gone. But the majority of that podcast, I don't really know. I haven't really even seen any episodes. Cole, if you're watching, he sends me clips of it sometimes just for cringe content, I guess. But cringe content among, I guess, all of us. But I don't really cover their live streams too much, but I guess, it was entertaining to say the least. I only watched the only one I've seen, and actually you guys can see that if you guys are curious. So let me actually, so I don't really, this, except for that one that Cole, I guess, sent that one to me. But if you should see this, like the only one that has a red bar is this one. That's the only one I watched to see to it to the end. I can't really stand to watch the rest of them. But in regards to that, good. Some YouTubers are probably going to be cheering this on. Yes, I saw that there were a lot of people making content on this, but that covers that story. So let's see about some of the comments here. So Wayne Mo Vote, did you see Jeremy Stock Challenge? If you beat him, he will donate $5,000 to your charity. I will just simply bet basically the SPY against him, but he wouldn't even take me up on that because part of his challenge was for 10,000 viewers and above. So this or something around there. So this channel wouldn't really qualify for that. And that's his newer video. Is there a new one? I don't really watch his content, but so if there's a new video about that, I don't know. All right. Hello, how you doing, T? I'm heartbroken for those guys. And if anyone deserves a vacation, it's Jeremy. They've done so much for the fans' portfolio. Fabio, what kind of product do you use in your hair? Nothing. Absolutely nothing. I just literally showered. And that's about it. But this was shower with just water. So is it honest brand? No. I lost $2 million on my portfolio in my grift money from FTX. I need a vacation also. Woo! I love Lafufu equates YouTube views to credibility. Yeah, that's how we do things, right? The views actually equal credibility. So another bit of news, we actually have the CPI data reported this week. I don't know if you guys got a chance to see my video that was totally clickbaity and hilarious, that if you clicked on it thinking, actually, let's do a kind of a shameless plug, so to speak. So I just want to show the off the thumbnail how amazing it was. I love the thumbnail. I love how these thumbnails are so fun to make. They're so fun. All right, no shame in that. So this thumbnail right here, it's getting worse. This is bad. So clickbait, title, clickbait thumbnail, not at all what the content really was. So if you guys watched it, good for you. I guess some people, I don't know if some people just like, looked at it and were like, oh, buy it. But yeah, we are in, well, every time you do see clickbait for me, it's obviously going to be for the poking fun. And sometimes I like to actually poke fun at the people who clicked on it for the clickbait at the very beginning of the video, just because, it's fun, whatever. You're supposed to have fun doing these things, if anything. All right. So, yeah, all in all, I think that, the CPI data is really interesting how, you're looking at it from the perspective of like, you're looking at past data to kind of derive something or a decision from a game that, is supposed to be played looking forward into the future, which is hilarious. I mean, we saw, okay, I don't know if you guys saw the video, but I showed me Kevin getting all excited and stuff. And of course, that's actually like part in brand. He does that. He gets excited. He amps up the viewer, the audience, and the viewer is like, oh my gosh, CPI and all that jazz. In reality, why, again, if you echo Peter Lynch's teachings, why macro should not even matter to the retail investors, because, first of all, you're probably going to be playing with fire and get more things wrong than anything. But yeah. Okay, so yeah. All right, so let's see here. We are not streaming 9+ hours. I see that question just came in. This is not going to be a 9-hour stream. And it is a big shame that I can't make that public. It is a big shame. But it was a fantastic live stream. I got to see so many of you. By the way, I'm not doing this on StreamYard, which is not my sponsor or anything like that. So I can't have guests on this one. This is a solo. Of course, I actually can have guests, but the way to do it is kind of actually being a little bit creative. In order to do so, I have to use like a third-party platform and connect it. It's not StreamYard, which is so simple and intuitive. Totally, you can find the link down in the description below to find that affiliate link that is totally exists, by the way. So... take off that. Oh, that's funny. All right. So, yes, Julius, we are almost at 3K subscribers. We probably will reach there by the end of the week. But yes, it is surreal because we started, I don't know when we started posting videos, but I think it's like October last year, something like that. The YouTube grift is stonk amongst the biggest dog YouTubers. Yeah. So they're going on vacation, but still uploading on their main pages. Yeah, because, we all know what it meant, but yes. So thoughts on investing in portfolio for kids 529A market or target fund? So I can answer this question because actually my wife and I are going to be setting up one for our non-existent kids. And why we're doing that is specifically because we want to start actually planning now. So a college fund, I think now, and we're planning on probably doing it through some sort of market-based fund, right? Not really a target date fund. Of course, you can probably do so, to varying degrees of success. It makes sense because you don't really understand or know what the market conditions are going to be at that given time period. So taking a step back, that does make sense to probably put in a target date fund, but, depends on what you really think, all right? I don't know. I haven't really gotten to that point where I have to make that decision. I'm in the setup process. But I do think I'm going to be setting up one soon for my non-existent child. And the way to do that is actually interesting. You got to have to make like I think it's like a sponsor, one sponsor and something like that. I don't know. I spoke to the banker the other day, but we do see how much do I bench press? So actually I never tested on my 1 rep max, but just the other day, because we do chest on Mondays, just the other day, me and my gym buddy, we did about for 315 pounds for about 4 reps. 4 reps on 315. So I don't know what my max would be. You could probably, there's probably some way to calculate that, but typically we do, the standard is 225. That's like what we would do as a standard weight. And then we do 1 set to warm up with 135. So just a quick 20 reps on the 135, and then we do 225 after. And then we move up at the very second to last, we'll do like the 315. And then we'll do it for that. All right, but that's on a flat bench, not on the incline bench. Okay, let me just see here. I think my eardrums are going to burst. Oh, wow. Okay, well, take care of your ears, Noam. All right, so All right. Anyways, for some other context, as far as some other things, we have Stockmo, and Everything Money. They're kind of spitting out their little spat going on. So if you watch Everything Money and you see how they've been coming after YouTubers in the past, I guess, 2 weeks or so, they started last week, and I actually talked to the members I had a call with them on Monday in the Discord, and I was trying to get this message across. I'll get this message across to you guys here too. I do think that YouTube Finance is kind of going to go through a reckoning of sorts. And I think that's good. I mean, I was telling Strongman that I think the self-cleansing is going to be a real thing. I have faith in it. And I think that, the audience themselves, as in the community on YouTube, the viewers, are starting to notice a lot more than before. It's kind of like spreading like wildfire. So as you guys, comment to others, it sort of just spreads that ideology around. And so in the future, I don't think a new Jeremy can. I say that, and probably that's not the case. But a new Jeremy can't spawn, to say the least. But yeah, that's pretty much how I feel about that. Stockmo and Everything Money, they're having their little spat right now, or so to speak. And then I know that Chris is actually going after Stockmo. It's probably something we're going to be talking about tomorrow. Which, by the way, the Bogleheads live stream, which was, by the way, the spicy live stream that was on this channel, that was because I was chosen to host it that week. That's going to be tomorrow. So that's where we kind of like let loose a little bit. It's not like these live streams. But although it did change into a Capital Mindset subscriber live stream where I really, really did enjoy having conversations with all of you guys and bringing you guys on here and hearing your voices, putting voices in faces. What's up, fake alias? I almost said sup alias. How you doing? What was the call? No. So this was actually in the deluxe. I do a minimum of a weekly call with those guys. And then we'll go over the market news, what's going on in the market, some thoughts, answer some questions and stuff like that. Oh, we actually had 2.99. Okay, I didn't even notice that. So we actually gained some subscribers. All right, so and one thing I actually do want to then cover is the CPI stuff. So Andre Geek, actually, I just want to share this with you because I think it's actually funny. Again, this is the tabloid part of the live stream. Then we'll get to in some more serious
All right,
news.
so my prediction came true. In my last video, I said that once the CPI numbers or the inflation report comes out this week, if it's above 8.6%, the stock market would finish the day.
All right, so this is basically where Andre Geek is actually coming out, and Cole told me to actually play that or take a look at this video because I made a video recently kind of making fun of people who use the CPI to kind of derive future decisions, right? Because you're looking at past data, and then from there you're kind of saying, okay, what do I do about the future, right? So it doesn't really make sense. You can't use it in isolation. You got to actually go a little bit further than that. And so Andre Geek, obviously Andre Geek doesn't watch my videos or anything like that, but I think, oh yeah, there you go, investing with Cole. Weird timing for you to join, indeed, right? Indeed, because I was just talking bad about you. If you go back on the video, you'll see all the bad, nasty things I said about you. But anyways, so Andre was, basically making this video, which is kind of hilariously timed, considering the timing of my video, saying that some people will do this, and there you go. That's perfect example. So his predictions came true, guys. His predictions came true. So, and so, I think that all in all, this is going to be one of the best things that generate views is really highlighting the CPI and all that stuff. And you have monthly content because the CPI is reported every which so month. But if we were being honest with ourselves, do they really understand or have a modicum of understanding about the plumbing of the financial system? Probably not. And this was another conversation we had on kind of the Discord regarding Me Kevin. So if Me Kevin understood even, just a modicum amount, right, would he have done what he did? I don't think so. For example, he timed the market. When I mean by time the market is he sold everything at one point and then repurchased the shares, and he purchased I think it was all Tesla. So not on top of that, he clearly did not identify the liquidity crunch because he on top of that chose one of the worst assets to hold, one of the last bastions. I mean, to say the least, it's going to be one of the final ones to kind of kick the bucket, so to speak. But yeah, so Zach, I think you found humor in it as much as I did, which was basically saying, yeah, my prediction came true regarding the CPI and saying, okay, the CPI does this, this will happen. All right. So also on the bit of news, I did talk about this in a recent video, but I'm going to be highlighting it today because it's part of, I guess, the news segment. And we're going to be talking about the banks. The banks all reported earnings with various degrees of optimism and some pessimism. So if you were paying attention to the stock market today, you probably noticed all the banks rallied, which is almost like I jinxed it because at the tail end of the video yesterday, I told you guys I was be buying banks, and then it looks like the market's like, yeah, you're not gonna have a good day to buy banks. You know, it's not gonna be a bad day. It's gonna be a bad day to buy. It's gonna be a good day to if you are selling. But yeah, so that unfortunately happened, but it's because of Citigroup. So Citigroup actually came out and kicked some butt. So we saw with Citigroup, they actually showed us that they had some strong performance in some segments, such as, for example, their market segments. Their market segment grew by about 25%, but go figure due to the volatility. And, you know, they also kind of benefited from rising rates because of the assets that they were actually investing in. So watch the extra 2 minutes of the Andre G. Okay, an extra 2 minutes? Yeah, fine. We'll do that because we're still in that part of the video. So let's go ahead and
in the red on Wednesday. And sure enough,
reaction,
it
guys.
did. I'm a genius. No, I'm totally not. I am not smart enough to outsmart the market. It's easy to see in hindsight because anytime economists give us their prediction, if it's anything above their prediction, which was 8.8%, chances are the market will go down that day. And sure enough, we got 9.1% instead. Another 40-year record high and another once in a millennial lifetime event again. But what it means is that this meme template is running out of space to put inflation numbers down. In all seriousness, what it means is that it tells investors the worst is not behind us yet. So investors get scared for their jobs and the recession. They have less money to invest in the market because of inflation, so they sell off some of their stocks to raise some cash, and stocks go down in value. So that's the stock market this week. Pretty simple and straightforward. Now let's talk about crypto, because the worsening just got worse. We had another major crypto company declare bankruptcy. That company was Celsius. Now, if you've never heard of them, Celsius is a pretty big player in the crypto space. As of May this year, they reported their AUM, or assets under management, as roughly $12 billion. As of June, they reported 1.7 million customers. And last year, they raised $750 million in their Series B funding, valuing their company at $3.25 billion. But that's not the crazy part. The crazy part is that one of the entities that gave them money was Canada's Caisse de dépôt et placement de Québec. I probably mispronounced that, but that is Canada's second largest pension fund, which is unfortunate because a lot of Canadian retirees...
I'm tired of it. Yeah, I don't really know what to say about some of that part, but some guys... Okay, so this comment actually is pretty important. Okay, hold on. Let me actually... Bob Smith, how the heck did Warren Buffett know Citigroup was a buy? I swear money buys insight. Money doesn't buy necessarily insight. Remember, it's also a fair bit down from when he was actually acquiring it. So you'd still be able to acquire it basically at lower prices than what he was. So keep that in mind. So yeah. With Citigroup, you had a business that is fairly depressed. Like if I actually were to, let me actually go and bring up Citigroup. All right. So if I go C stock, everyone. We're going to look at stocks here. Okay, so let's bring up stocks and let's go back to desktop. All right, let's see. So with Citigroup, you can kind of see if I take a look at that 5-year, it actually is getting back down to levels, or was getting back down to levels. And I think I talked about this actually in the video yesterday about the banks. So it was getting back down to levels of like the COVID-19 pandemic right before the big rally that the financials had. So, it was priced. It is priced for a bunch of pessimists. That's actually why in the video yesterday I said I'm going to be acquiring banks. And actually, for the comment that was on that video, I'm answering your question here, but I won't assume you watched this live stream because I'm not like that. Don't worry. I'll actually respond to your comment. There was a comment in that video saying, why are you... Oh, sorry. No. I actually did already answer this. This was in the Discord. So yeah, you already got the answer to your question, and I'll answer it again. But it's because the financials are presenting interesting opportunities, because the market is pricing in. It's forward looking. So a lot of pessimism is being priced in terms of the economics. You could make the argument that it's not that bad, or could get worse, or the pessimism could get even worse. Absolutely. But that's where I kind of highlight, well, the banks are looking cheap because the market's kind of pricing in some reduction in terms of earnings potential. So yeah. And Citigroup being one of the cheapest, I mean, you can kind of see it on a quick look, on a preliminary look, the PE, I didn't mean to zoom in that much. PE is about, just go ahead and 5.89. So it's right behind me. You can see it there. And it's still yielding about 4.08%, even after the 13.23% rally today. So yeah, that's pretty much the Citigroup is a cigarette butt investment. Yeah, because it's trading at, I think the book value or the tangible book value is about $70. And we're seeing it at, $49 right now. So Warren Buffett's probably, investing in it for very similar reasons. I guess he's looking at it, as a potential that the bank could fix itself over a long period of time, right? The new management's in, well, I say relatively new. She's new within like the year or so or 2 years. So she's still got a lot to prove, but yeah. And as far as the quality of the bank, while they have a lot of problems, they can fix themselves. Now, in terms of quality, like, again, they're no JP Morgan, but they're nothing like, and I was very clear to say this, counterparty risk. Do not confuse that with Voyager Digital. That's a whole other animal. I mean, when we saw a lot of that, when we looked at Voyager, no, they're not the same thing at all. But it's still there, more so than other banks. And we are going to see, we did see Wells Fargo report today. Much of more the same, by the way. So I'm going to talk about it a little bit in this video, but much more or less the same in that report. And we're going to see Bank of America. Who else? I took a look at Monday. Monday, we have a lot of other banks. Bank of America. Let me see. I wrote it down. Let me pull it up. Bank of America, Goldman Sachs, Charles Schwab, Prologis, Synchrony Financial. So yeah, Monday's also going to be a really interesting day for me. I'm going to be paying attention to Bank of America. Why not Goldman Sachs? They are expected to actually come down not drastically in terms of stock price. I'm talking about sales revenue or revenue. And then I will take a look at Prologis just simply because Prologis is the biggest player in that space, and they're very impactful. Even in this area, they buy a lot of land. They're actually very competitive from now, what I remember my previous place, that they're pretty competitive in terms of buying up real estate in the industrial sector, specifically warehouses and stuff like that. So let's see here. So I see some questions. Let me see if there are any questions, then I'll continue. And JP, if you're referring to the Discord call that we had for I got another 9 hours in the general Discord, yeah, I got to do one of those again because I did have fun. Now, the ones I'm talking about usually is they're usually at 12 p.m. or 12:15 p.m. When I do them. Okay, so, and I try to do it now on Tuesdays at 12:15 p.m. All right, let's see here. Okay, some talks about Andre and Jeremy, so then I'll just continue. But by the way, you guys can ask any questions you want as well. So as far as banks go, we did see that JP Morgan Chase suspended buybacks, in case you didn't see that in the video or if I ever forgot to mention it, but JP Morgan did suspend buybacks. We did actually see, and I'll actually share an image with you guys here to show you a little bit about the performance regarding the stress tests, because I think that's also important. So let me actually pull this up and let me make it nice and visible so it's not too blurry for you guys. But I also I took the liberty of highlighting, actually, you can see Citigroup here. So yeah, because Citigroup's was the one I was wanting to open with. So this chart actually has it all with a highlight of Citigroup. So you can see Citigroup performed right there in the red, the median of 2.5. You can look through this, pause the video here, and actually let me zoom in this way, because now I just realized you guys were seeing a zoomed out version. But you see Ally Bank below the median, American Express well below the median. This kind of makes sense. A lot of consumer banking there. Bank of America above, Bank of New York Mellon below, but that's an asset manager, Barclays, US. So you can see Citigroup performed pretty well in this category. And the category is change in minimum common equity, tier 1 capital ratio, in severely adverse scenarios. Discover was also below, not to be surprised there, similar to American Express. 5th and 3rd below. Goldman Sachs performed really well. HSBC performed really well. These were actually among the best behind Credit Suisse. But Wells Fargo did perform above the median. US Bancorp, again, kind of on that one. But it's not like an end-all be-all. Doesn't actually prove or disprove quality, by the way. Just don't be confused, because Charles Schwab really performed under the weather there. But, so it's just one measure that we can actually just take a look at. So yeah, that's pretty much what I wanted to show. Let's take a look at some of these other things. Where do flies go at night? I have no idea, Campbell. That is definitely not a biologist. We're not a biologist that specializes in flies. Well, I'm break even on Citi. You're break even, you mean? All right, Capital Mindset. Do we get to talk about Elon Musk and Twitter, or is that too much of a meme? No, we can talk about that. So they're going back and forth, and that's actually one of the, funnily enough, Bacon, that was actually one of the things I was actually going to get to as well, because, again, this is kind of like a news segment as well. But if you've been paying attention to the Elon Musk Twitter fiasco that we've been paying attention to or keeping track of here and there, we see that Elon Musk and Twitter are now suing each other back and forth, or going at it back and forth, so to speak. And so if we actually see what Elon Musk has been telling Twitter, he's basically saying that they broke the terms of the agreement because they didn't show him, or weren't willing to show him the figures, or for him to be able to determine how many of them were really bots. That was something that was going on. Now, some experts have kind of weighed in, some legal experts kind of weighed in that it's basically a shoo-in for Twitter. So if Elon Musk does lose, that would mean that he would have to pay out about $1 billion, right? So this comes from, you've probably seen the same business professor. I think CNN interviewed him, CNBC interviewed him. He's talking all over the place. But if he's right, or if they're right, I think he's right, then Elon Musk is, he's going to have to pay up. And then that's going to be good for Twitter, because $1 billion is no chump of change for especially their size. They are cash positive. And what I mean by that is cash with their debt, right? So they have net cash positive position. But still $1 billion is $1 billion. Pretty great. All right. So Bob Smith. So Warren Buffett buying Citigroup. Let's see here. Well, also remember that banks is Warren Buffett's specialty. So Warren Buffett buying Citigroup, I understand. What about Occidental? He keeps buying. So I've actually talked about this as well, because that's kind of a counter. I guess we're counter to each other, but not really, because I've also talked about this in all the oil videos. So thank you for bringing this up, because this is actually a good point to kind of get into this. But you've noticed that Warren Buffett's been buying Occidental Petroleum, and he's been buying Occidental Petroleum at higher prices that they are today. So I can only presume to kind of think about what he's thinking. I don't know the guy like that, right? I won't claim to think or know what exactly he's thinking, but he's been buying it at higher prices, and or lower prices too, but higher prices, lower prices, and he's kind of been averaging in a position. And while Capital Mindset here, you probably noticed through the portfolio changes over time, the drastic drawdown of energy and commodities over time. So we had BHP that used to be a larger holding. We had ConocoPhillips that used to be a very large holding. And so we were selling into a lot of the exuberance, which is great, because now ConocoPhillips is way below the average sale price. And so looking at Warren Buffett's moves, it seems like we disagree on something. But it's not that. I think Warren Buffett is looking at it from a different perspective. I think he's looking at it from more of the longer-term supply issues regarding oil. So at some point, remember, my reasoning, and if you look back at all the oil videos, is that during a slowdown, something like, again, a 2008 scenario, but not to that degree. I'm just saying, if you go back and look at 2008, you can see how at some point, when things kind of slow down, consumers reject these higher prices. Consumers can only afford so much. So at some point, something has to give. This is not a good scenario if oil does come down. It's not a good scenario. Now, to some degree, we might point to other factors causing it, but pretty much my belief is that oil was closer to a top than a bottom when we were selling, and that at some point the consumer is going to get squeezed on many sides. This is going to have rippling effects throughout the economy. Buffett is not ignoring that, but I think what he's paying attention to is something a little bit different, which I do agree with. So I'll say this as well, is that the capex necessary, or the investment necessary in development in the oil industry, has been suppressed for quite some time now. So this hasn't gone away. And if you think that the economy will somewhat recover, aggregate demand will recover to some degree, then this is actually bullish for oil for a good decent amount of time. And so a lot of these assets will generate good future cash flows for good periods of time. Occidental Petroleum, being a very leveraged player, has a lot to benefit from. So I'll give you another example. Take a look at American Airlines. American Airlines, absolutely worstly leveraged of all the airlines, right? The worst. And so if the airline industry recovers really strongly, they have the most to gain, so to speak, because of how much leverage they have on the business. So look at them, and then side by side compare it to another extreme in terms of something that's good, like Southwest. So Southwest Airlines and American Airlines, put them side by side. You'll notice something as you look at both their balance sheets. American Airlines is obviously overtly the most leveraged of the two. And, pick another one. Pick Delta Airlines. Pick United Airlines, right? You'll also notice the same pattern, right? Of the big airliners, American Airlines is heavily over-leveraged. So if you somehow knew that all the airlines in aggregate or the airline industry would have some massive explosion, have massive tailwinds for a long period of time, the best one, or probably the one that will perform the best, is American Airlines, because the market's probably discounting it the most, right? If that makes sense, right? So Occidental Petroleum, he's probably identifying it as one of the ones that's really discounted because they took on a decent amount of leverage to acquire, I think it was Anadarko Petroleum, and they outbid Chevron. And at the time, if you were, looking at it from the perspective of COVID-19, I mean, take a look at how much the stock price dropped from that bid, right? And then you had COVID-19 come in, and all of a sudden, oops, we can't sell oil, or we're having problems with selling our oil. Oil prices are going in the red, right? Negative oil price futures, blah, 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 all that jazz. Remember that in the news? Well, that brings a lot of fear and FUD, brings a lot of FUD into a lot of these oil stocks, especially something like Occidental Petroleum. So you had the market kind of overreact to the downside. But, and I talked about this as kind of a mistake I made. I should have never sold my Oxy, because if I had kept my Oxy and actually did the reverse, maybe sold the Conoco, kept the Oxy, I would have had actually better performance. But I'm still happy. I kept ConocoPhillips and not Oxy because I was de-risking the portfolio because it was really heavily exposed. And still, it was good gains from Occidental Petroleum, so I can't really complain on that front, but it would have been even better. I mean, look at the performance from the same time period of purchase, right? Because remember, just before election and then just until, let's say until now, I mean, 485%. Fantastic performance, right? Fantastic performance, which beat ConocoPhillips handedly, all right? Let's just admit, handily beat it. All right. So I think he's looking at it as that kind of play. I could be wrong. I don't know what he's thinking, but yes. At least elevated oil prices will give the company a good opportunity over this decade to deleverage the balance sheet, and a bunch of other things, but basically that. Hopefully that answers that question or comment, Bob Smith, but comment, question, whatever that it is. But Fabio, I'm not a biologist. I just talk about biological tools. That will forever be part of the Capital Mindset lore. If you guys know, if you've been or you participated in that live stream, you know what it is. No worries, Bob Smith. Anytime. I love having these conversations with you guys. So I think they could face the Musk by Twitter. I think that, I thought they could force. Yeah, they can. They can. So well. I don't know if they can force. No. He's fighting over the breakup fee. I believe. I'm not sure if they can force him to buy, right? But there is the breakup fee because you can reject the deal. So if you reject the deal, part of that agreement is that you have to pay the other party $1 billion. So whoever broke up the fee. In this case, it was Elon Musk who broke it up. So Twitter's saying, well, you owe us $1 billion. And that's, I think, what they're fighting over. Okay, I see some comments about flies where they go. SoFi is approaching a price to book of 1.0. Ally is down to price to book. But the thing is, SoFi should never be trading at a price to book of 1.0. So if you're looking at it from a perspective of a bank, and this is actually something I talked about in the bank video. I don't know the exact minute I did, and I know it's a longer video, so I'll kind of repeat it here. But when you're looking at price to book ratio, you can't just, take that and apply it to all the banks equally. So for example, Citigroup very much should be actually trading below price to book. Goldman Sachs should also be kind of trading below price to book. And Bank of America, JP Morgan Chase historically trade above price to book. They're a bit higher quality banks. Wells Fargo, similar at price to book, a little bit above price to book. Ally should not be trading at price to book because of their portfolio. And the inherent risk under their portfolio, especially in a time like this. I would not expect Ally to be trading at a price to book at 1 or above. And something like SoFi also probably should not, hasn't earned the what it deserves in order to trade at above a price to book premium or at price to book. So for something like SoFi, I'd probably want a very big discount relative to book value. And that's just one metric that we would look at, by the way, not the sole metric that we'd go by. I don't think that we should do that either. But yeah, good that you comment that because with SoFi is a very interesting business because we talked about, like, for example, the bull case provided by a lot of investors out there, either on YouTube, on forums, and whatever. A lot of people saying that they're catering towards the high net worth individual. I don't really see it. Like, I will actually create an account. I haven't been meaning to do that, to try to just check it out, see what their platform's all about, deposit some money, and they have an interesting offer going on with one of their credit cards. If you open up something, you get a decent amount actually of cash back on a certain spend. But yeah, it's not that kind of video. So let's see here. Do you think falling commodities will lower inflation and help the market? Chicken or the egg, actually? Well, because it's more like the market is kind of nervous about what's going on in terms of, aggregate demand drop. Aggregate demand drop is probably going to be more the reason or the cause as to why we might see lower commodities, or why a lot of industries are pricing in those lower demand for their services, supplies, etc. So I think that's more what's going on, not the other. But, lower commodities will help out, but it's kind of like going back to that, the cure for higher prices is high prices kind of thing. So yeah, capital mindset to avoid both of them. I think, what are you referring to, the oil companies or the banks? Oh, Dan West. So it's to the banks. Yeah. So especially now, because the thing with Ally is, we talked about this on the Discord extensively. There are two banks in particular that I don't remember the name of the other one off the top of my head, but you guys are going to remember it. So there's two banks that are really heavily exposed to auto loans, which is actually one of the worst loans that you actually want to be exposed to if you think you're going to go into a downturn, right? So Ally Bank, a huge piece of their portfolio is auto loans. If you actually go I referenced the Ally Bank video. So if you check out that one, that would be basically where I'd cite that one in terms of my thoughts. But basically in there, I talk about how, the auto loan book is not ideal, especially if you think we're going to head into a slowdown. And maybe you don't think so, and then you could ignore that. But if you do think we're going to head into some form of slowdown, that's not really the one I'd want to own. All right, but there's another one out there. I forget the name. Gosh, it's even more heavily exposed to auto loans, even on the subprime category too, which is the worst one. And actually, I think if you had shorted that, you would have done pretty good, or had some sort of hedge against it. Okay, so a question about the Warner Bros. Discovery update. I'm waiting on their report. Well, it will come. It will come, actually. So I'm waiting for it to add. Yeah, Julius Caesar answered it. Goat Capital mindset lore moment. Oh yeah, when Noam came on. Yeah. Yeah, that's funny. All right, so capital mindset. What are some of the metrics that you use in order to evaluate the strength of a bank? So price to book is one of them. Return on tangible book equity is another one. That kind of shows me the efficiency. I want to be paying attention to is also return on equities, one of them. So return on tangible book equity, return on equity, return on invested capital, price to book. I already mentioned that one. Price to tangible book. And typically I would try to kind of change in terms of, like, I wouldn't use cash flows to evaluate a bank. I wouldn't really do that. It's inherently lumpy, inherently weird. If you just go take a look at one, don't take my word for it. Go look at one. Go look at the cash flow statement, compare it back to many years, and you'll kind of see how it's just so lumpy. So I would adapt, an evaluation around it. But yeah, hopefully that answers the question. All right. Can you reply? Absolutely. I'll reply to it after the live stream. To the best of my ability. All right. To the best of my ability. Capital mindset. I know TTCF is a meme, but is there any particular reason why I only briefly checked the company out? Is it a meme because Jeremy owned it, the insane debt, trash margins, etc.? Okay. So I love the question. Because it gives me the opportunity to kind of go a little bit extensively into this company. So, Tattooed Chef, right? First of all, let's start with the basics. One of the things that was inherently interesting about it, and let me actually pull up the desktop so you guys can see it with me, is it's a vegan food company. Okay, so this was starting to get talked about along the lines or the same time when a lot of vegan food companies were getting pretty popular. I can think of, for example, let's say, Beyond Meat, right? So Beyond Meat was pretty popular around the same time. And so Tattooed Chef was offering a play, and they were a SPAC, by the way. So also during the SPAC craze, mind you. And so the company was basically trying to tackle or attempt to tackle the frozen food category for vegan foods under a brand name such as Tattooed Chef, something that, sounded hipster, right? And so something that maybe people could relate to. And so you might remember, or maybe you didn't see these videos because if you're asking why is it a meme. So if we look at, for example, Financial Education Jeremy, let's just name him outright. The branding was a lot of the reason why, someone would want to invest in this. They would keep saying that over and over, the branding. Sam Galletti has all this. Oh, by the way, very classic. I have to shout this out. If you go check out the older videos about why Tattooed Chef is great, right? You can see that this reason is cited a lot. Sam Galletti has industry experience. Where have we heard that before? And remember, every time anyone tells you the reason why something or someone is right is because of this experience, blah, 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 that's a logical fallacy, just first of all. And so we heard that same argument be made with something like Voyager Digital, right? Remember that, Voyager Digital? What was the CEO? Where was he from? Oh, that's right. He was from E-Trade. So therefore, that's a reason why we can, be happy with Voyager Digital. All right, Sam Galletti has been in the industry for, a variety of years. I forget how many years, but he has the experience, no doubt. And so he actually, Tattooed Chef's part of their business is that they have a white label products. So if you go to, I think it's like Trader Joe's, you'll see that in Trader Joe's, a lot of the vegetables there, you can actually find their products there. You might see like their packaging and stuff. You won't see like the Tattooed Chef logo or anything like that because again, it's white label. So you'll see the Trader Joe's logo, but that's some of the things that they did. And I believe it was actually Trader Joe's that housed their products. So you had all that going for it, right? And then you had, this thesis that, okay, the population is moving towards a more vegan diet, right? So that excitement was there. There was literally a YouTube channel right now. If you actually go check them out, I discovered them, I think, not me like versus everyone here in this channel. I'm talking about versus Cole because Cole loves to send me, the cringe on YouTube. But I think I found this. Maybe he found it before me, and it's a channel called Plant Stock. Now, nothing really against the guy. I think the guy's just really passionate about vegan food, and he wants to really invest. I don't really know too much about him, so I won't really disparage him at all in that regards. Okay, but he focuses primarily on that, and you can see that he grew a channel solely based on plant foods companies. So back in the day, back in like 2021, even I think 2020, I don't know really when his channel really picked up, but clearly he built a brand around vegan food companies, vegan food stocks. Okay, so that's kind of, again, where Tattooed Chef got its like. So then we delve a little bit deeper. Okay, so what did we see with Tattooed Chef? Well, we saw that there was high revenue growth, which if you pay attention to that guy, he, not Plant Stock, the big guy, the Mr. Special Thinker, he actually focuses primarily on, looking at a couple line items and then just saying from there it's a buy. And then also taking a look at, some of the SKUs, talking about SKUs. So all these things, it became a joke because the analysis was so surface level, but the individual believed so wholeheartedly that the analysis was in depth. Right, it was so profound. So in the belief that it was profound, it just made those who could see that it wasn't profound almost laugh at it or think it was hilarious because it was kind of became a joke. So as that happened, Tattooed Chef slowly transitioned into kind of more of a meme than anything else. So if you invested in Tattooed Chef, now it's almost like, oh, you're pulling a joke. If I told you guys I'm investing in Tattooed Chef, you guys would honestly think I'm joking. And in general, if you probably saw a YouTuber saying that investing in Tattooed Chef, you probably think the video is a joke. And you think that at the end they're going to say, I'm just joking, this company sucks, because that's now the prevailing viewpoint. That's the popular opinion. Because if I show you the performance this far, it is down 69.49%. And actually, that's a wonderful number. That's a wonderful number that it's down 69.45%. So 4 plus 5 also equals 9. So it's 6.99 or 69.9. Sorry. Just kidding. But anyways, in all seriousness, if you actually also took a look at the company, another part of the analysis was look how much cash they have in their portfolio. And I think I did this update in one of the last Tattooed Chef videos that I did, because I only keep updating stocks that I've talked about in the past to kind of keep track of them. So for example, I won't do an update on Voyager Digital for obvious reasons, because it's dead, it's bankrupt. So, but I'll do an update here and there on Corsair, on Tattooed Chef, because they were stocks that I covered in 2021, and negatively, mind you, I covered them negatively. And so I'll do updates like, has anything really changed? And so I'll proceed to update, because at some point, something can change. We want to keep our minds open. We're not closed-minded, but nothing's really changed. And in fact, some things have gotten worse. So for example, the cash has actually drawn down a bit. And I say a bit, a little bit facetiously, just drawn down quite a bit, right? And that was actually one of the bullish takes. They have a lot of cash on the balance sheet. They're prepared to invest, et cetera, et cetera, et cetera. And now that, reason has gone away. Margins were down, temporarily really down, but they're still down. They're still not where they should be. They're still not showing signs of scalability. It's also a company that you definitely would not want to own in the case of a rising cost environment, right? Because as they're starting up, it's almost like on top of everything, this is a bad environment for them to get started, because as costs continue to rise, it doesn't necessarily translate to rising prices in the consumer's facing standpoint. So what I'm trying to say by that, it doesn't mean that they can raise prices on you. Do they have that brand recognition yet? Not really. They were trying to build it. So now it's a very difficult time for them in that regards too. So I'm talking about it from, Sam Galetti's business perspective. How can they really do that? And keep in mind that who's to say who has the power in the relationship between them and the retailer? So all that kind of culminates into, why it's achieved meme stock status. So if that's enough, let me know. But yeah, that's pretty much covers most of it, I would say. All right, so let's see here. But yeah, good question. That's basically why. I think there is a price point where Tattooed Chef becomes an interesting speculation, but there's a good reasons why it has become a joke of sorts, right? And again, just ask yourself, if you saw a video tomorrow posting from some YouTuber saying, I just bought Tattooed Chef, and it wasn't like the typical ones, you'd more likely think it was a joke, right? So ask yourself, it's become a joke. All right, so let's see. I think I didn't buy this company initially because the food tasted like poop. The cauliflower plant-based burrito bowl had a real cheese, so it's self-defeating. Yeah, that's the other thing. That's another thing I forgot to mention, actually, which was a lot of vegans didn't really even like it too much. So for a variety of reasons. One of those is that, right? And so they kind of had this weird branding because they're branding themselves as kind of this plant-based option, but then they have a lot of options that aren't really. But then like a meat eater is probably, or like, let's say a normal person. I'm not saying that you vegans are not normal people. You know what I mean by that? Like typical, let's use the word typical to not offend anyone. Typical diets, current modern typical diets. Walking on eggshells here. But I'm just kidding. I'm just picking you guys. But anyways, in all seriousness, it's weird where they were kind of putting themselves on as terms of like what they're targeting. What is their target market? What is it? I don't really know. I really don't know. We can almost have a debate about what their target market is. Is it the ones transitioning to vegan foods? Because vegans, typically, they're going to probably, do their own thing at home, right? What's the probability that they're going to take this random frozen food meal? Now, they were moving into snacks, which was another bullish reason for the company. But I don't know, man. I don't know. Yeah, we'll see. We'll see how that pans out. But of course, we'll keep an eye on it. And if things change, I'll change my mind. But things haven't changed yet. Gavin reminds me, would you be forced to buy one of ARK's top 10 holdings? Which one would it be? Let's actually take a look at that. So that's a great question. I love questions like that. Makes me actually, questions like that make me rethink my life. All right, let's go to ARK Invest's website. All right, ARK Invest, let's see what you have for me. So let's go here. So I'm on this website here, this lovely website. I'm not being sarcastic. It's actually a pretty cool website. Investment solutions. I think I have to click here. ARK Disruption Innovation. I'm going to go to this one. Okay. I'm just going to go to the base one. Oh, I think I'm in the wrong place. FinTech, artificial intelligence, explore ETF. There we go. Explore ETF. Yeah, whatever. Take me wherever I need to go. Give me the virus. I don't care. All right, I'm here. Give it to me. All right, so Tesla, top 10. So the rule is top 10. So I have Tesla, Zoom Video, Roku, CRISPR, Exact, Teladoc, so Therapeutics, Unipath, Square, Beam. Out of curiosity, what's SQ trading at? Because maybe I'll just choose that one. I mean, I don't like Zoom. Don't like Roku. Roku maybe as a speculation, maybe they get bought out by Netflix, like it actually happens. Maybe I'd do that. But no, honestly, like out of all these, I'd probably pick I'm gonna lean on BlockFi, or not BlockFi. Oh my gosh, not Freudian slip, but you know what I mean. Slipped out. Square. So I'd probably pick out Square. All right. Are you not entertained? Are you satisfied with that answer? If so, let me know. All right, that's the one I pick. All right, so Capital Mindset, what are your consumer tech company, Apple, what metric do you consider most important? Being in deep in the two sectors can be challenging. What to focus on the most? AG Apple, most metrics do you consider? Okay, so, well, first, I have to see from a financial standpoint, is it attractive, right? Is it something that I sense that there could be an opportunity if I understood anything further? Because if I go from that perspective and I go, okay, well, it's trading so richly that if I understand something deeper about the company, I can see that maybe the market's mispricing it to the downside. So I try to see if I can find some semblance. So basically, I have to see is it not egregiously overvalued? So where my assumptions have to be insane for it to make sense for me. Right, where I don't have any room for error. And so if I have some room for error, then I go a little bit further. Then I start to say, okay, well, if I'm looking at something like consumer tech, one thing that I would like to see is what are the adopters saying about it? So, if you remember from your when you do a marketing analysis, you have, the adopters, the early adopters, then you have the people who go after that, et cetera, et cetera, et cetera. So what are they saying about it? And then that kind of can gear towards potential, or maybe it's more mature. So if it's more mature, we go later down the curve. And then what are they saying about it, right? So try to do some research in that regards, maybe some popularity research, maybe some search results research, maybe see what people are really talking about in terms of that category of consumer tech. How sticky is the product? Try to see, okay, what are they building? Can you envision the ecosystem? Because maybe you don't understand it, and then you can kind of just skip it, right? You don't have to participate. If you don't understand what it is that they're building, why would you be involved? Because then, again, are you going to be able to determine whether or not they're doing something good or bad? But yeah, so then from there, I think the ecosystem is really important with consumer tech. I think that's kind of been shown more or less. Like if you look at Amazon, they're building an ecosystem. You look at Google, they're building an ecosystem in their own respects, right? I think with Google is a very powerful ecosystem. I mean, look, you're here on YouTube. I can't tell you how many times I actually will use and do use Google products on a daily basis, and not for my own entertainment, but for my ease of use in certain websites where Google Chrome can just say, okay, here's your password, and it's like saves my password. I can change it upon request from here. So a lot of these things that make it just easy. And you're talking about consumer tech, but Google has a consumer tech division. For example, they do actually have phones. They do have Google Hub. They have, home security systems. So I like to see, okay, what are they trying to penetrate in terms of what markets are they trying to get into? Do those markets, I think, have, huge TAMs? I know that word is overused, and also is kind of a meme at this point because you've probably seen it in so many earnings reports or earnings slide decks. They're like, oh, look at our TAM. Our TAM is so big. And, you're probably like, oh, everything has big TAM. So really kind of understand, does it actually have a strong TAM? Do they have the capability? Do they have what it takes to address it? That's something I would probably look at. But yeah, it's broad, but because we're not talking about a specific company, but more like Apple. If you kind of, Apple's already seen and done it. We obviously point to the ecosystem they've built. And so like, for example, my phone, I probably don't even think of another phone besides iPhone. I'm just like, oh, iPhone. Next time I upgrade, oh, iPhone. The next time I upgrade, oh, iPhone again, surprise. All right. So do you think we'll ever get to a point where commission-free trading goes away? I don't really know. I actually don't know. I don't see a problem with commission-free trading as long as, like, if you're trading, that can be a problem. But if you're kind of just buying and holding for long periods of time, I don't really care. Like, I really don't care. I mean, that's just me. Me joining Fabio 69. Yeah, that's how it is. So banks, I agree with the metrics you mentioned, but should you also look at asset quality? Yeah. Oh, yeah. Well, I've been kind of talking about that. So I just kind of went over my head there, but yes. So I would. So for example, good thing you bring that up. I mean, we just mentioned Ally. Ally, what do they have on their books? Well, they have a lot of auto loans. What's the quality of that? What is the economic context that we're going into? How does that affect their portfolio? Good, bad? Maybe so, because saying just ignore what's going on is not the right approach either, because then you clearly don't know what you own, right? Because not all banks are the same, and so banks really do care about that kind of stuff. Yeah, this is an example. Fabio buys CTC after the end of the day. Zombie apocalypse has begun. Okay, so now you know. So if I buy Tattooed Chef, the world's ending. Apple should do a stock brokerage of their own stocks apps, charge $1 monthly fee for unlimited trades with no payments for order flows. Why in the most thoughts implications? Well, I don't think Apple wants to get involved with that, because then they get a lot of regulations will be put upon them. It's not something like they don't want to be a bank. If you look at the Apple wallet, it doesn't do any of the banking stuff. It just does. It gives it to Goldman Sachs. Goldman Sachs is the bank, right? So with the Apple credit card, it's not Apple. It's an Apple brand credit card. And it does some things with Apple, services and technology, but they don't want that involvement. That's too much of a headache. So Goldman Sachs was like, yeah, we're a bank. We're perfectly okay with doing that. Here you go. We're already regulated. So it's all well and good. The top 10 stocks to buy for the upcoming water war between TTCF. That's really good. That's actually a good comment. All right. So what do you mean? What do you mean? Okay, so let's see here. Let's go down here. I got to do better at catching up to this. What's your favorite business case study? It's one I always mention, so I don't want to bore you guys, but it's honestly Gencor. Gencor is a really good business case study. So it's a good business case study. You know what? Let's get into it. I'll give you guys a case study here today. So, but if you guys have seen other live streams or me not rate other live streams, but I rated Chris and the other CPAs live stream together, and I was kept telling them to look at this stock. So I'll actually show you guys here today. I'll use let's go on Yahoo Finance. I despise Yahoo Finance, but let's go on Yahoo Finance. I think the website needs a little bit of work, but all right. So let's just use this free resource to pull up their financials. All right, so let's go here. So this is Gencor, right? Small little company. I like this one as a case study, and I'll explain why. All right, so let me just spoil it so you guys understand this is not a pump at all. I don't like this company. All right, I don't like it. All right, so there you go. Now you know my opinions before we get into it. All right, so now that we're getting into it, we look at a P ratio, okay, 68.36, all right? On the surface, it's like, ew, that looks disgusting. Market cap, where's the market cap? 137 million. Pretty small company. Okay, so not really much is known about this. And let's go to the financials. I'm an innocent little Fabio before discovering some of the interesting parts. All right, let's go down the income statement. All right, so we have total revenue. And this is cost of revenue, gross profit. So about 18 million. All right, 95 million, 18 million. All right, I don't know anything about this company right now. I'm just like, okay, it's probably something low margin business or moderate margin business, like gross profits of 18 million with a 95 million revenue print. All right, so probably something ugly business, right? Something ugly, pretty competitive maybe. I don't know. All right, operating expenses about 17 million. Operating income about 1.3 million. All right, so all this stuff already looks kind of weird to everyone. All right, so probably already X's out for some of you. All right, then we're gonna go, again, little innocent Fabio. Don't know anything about this company. I'm gonna go to the balance sheet. Oh my gosh, what is this? Total assets 179. What's going on here? Oh my gosh, current assets 166 million. That's like the market cap of this company. Oh my gosh, cash and cash equivalents of 118 million. What? So much cash and consistent. Why so much cash? And then we go to total liabilities. Oh, I want to see some debt. All right, current liabilities. All right, what? Total non-current liabilities $786,000. What? Long-term debt and capital. What is this? Capital leases. What? There's no long-term debt. Long-term capital leases only of $392,000. So no debt, cash of 118 million. Oh my gosh, this is a buy, right? Just on the book value or whatever. Where's that statistic? I think it's, let's go to statistics. Maybe it's here. Is it? Do they put it up here? No, they don't. Or do they? Am I blind? All right, let's go to stats. Let's look at the book value of this guy. All right, book value, where are you at? Price to book. Oh, it's under book value. Oh my gosh, it's a buy, right? It's a buy if the company goes bankrupt. Not so fast. So reason why this is an awesome case study is it's a really good example of something that can be a trap, all right? And a trap in the sense, by the way, it's not even covered, so it doesn't even have a 1-year price target, which is funny. And I agree with this. Yes, Yahoo, you're right. It is overvalued, but they don't explain why here. They're probably looking at some of these other metrics. So someone looks at this and they go, oh, it's a buy because, book value below, so much cash, no debt. What could go wrong? And by the way, something I want to highlight to you, they have a lot of cash. What do you think they're investing that cash in? All right, so let's go to financials. Let's go to the income statement. So let's see if they list out the line item. I'll be really upset if they don't. So let's go operating expenses. There it is. Interest income. All right, so interest income is actually a big component of the total income of this business. And so if you actually see the operating income and the interest income, their interest income is larger than their operations. So if you actually take a look at this from an enterprise value standpoint, right? This company is a lot cheaper than appears just because it has a stupid amount of cash. And you probably remember a lot of super investors telling you guys, I'm just going to drop the young, innocent version of you. That's weird. All right. But basically the newer investor, you probably read a book and said, blah, blah, blah. That is true, by the way, right? Don't want to punish a company for having too much cash, but this is an example where you do have to go beyond the numbers, right? So the reason why I love this case study is it's exactly that. It's a really good case as to why investors should go beyond the numbers. Because, and I don't want to spoil the search term, so I'll hide you guys for a second. But if I go Gencore, I'm not going to tell you the rest of it until I finish. All right. You can tell I'm kind of excited about this. But anyways, let's go here. Oh, no. Google, you don't show me? No. Oh, that's why, because I spelt this wrong. There we go. All right. Okay, so now I shall show you the magic, right? So if I look up Gencore shareholder lawsuit, all right? Oh, this comes up. That's interesting. So I find out that investors sue Gencore several times, actually. So 1991, there was one. In 2004, there was another one. But the one that's more prevalent is one that actually came from the company trying to go private with the current owners, right? And they tried to take it private. And by the way, what I'm about to say is just conjecture. So, just conjecture and opinion. But what basically happened after that later lawsuit for taking the company private, right now their share structure is that I think the current owners, the current managers, they own, I think, 25% of the shares outstanding. Somewhere around there. It's a minority. I forget how much it is exactly. But go find out and, have fun with the case study. And then they control about 75% of the voting rights or something crazy like that. They basically control the company. So this is a good example of a company that has everything going for it in terms of health, balance sheet health, et cetera. Looks really cheap on all metrics, especially when you consider, all the cash they have. And, you say, but they're trading below liquidation value or whatever. All right. Well, what you need to account for is management team and how they can royally mess with you and not basically return any capital to shareholders for a long period of time. And why a company at the end of the day is the totality of its potential to return capital to shareholders at the end of the day. That's the only reason why you buy a company. If I took someone and asked them in private, or for a private company, that's their answer, and that should be their answer all the time. In the public markets, we basically ascribe the potential for a company to do so. It doesn't necessarily have to, and if a company doesn't return capital to shareholders in the immediate term, it doesn't mean it has no value. So there is value in the potential that it will. Now, the thing with Gencore, the reason why it's always trading cheap is because it's been a long enough time that investor base actually understand there is still a potential one day that this could change, but for the time being, the company has no desire to be shareholder friendly in whichever way. So then the conclusion then comes, okay, so what is really also important is making sure that management teams in place that control the company are shareholder focused, are focused on, we're in this together kind of thing. And if that's not the case, how you can have lackluster returns for a long period of time, despite kind of all the stars aligning in some respect. And it's been that way for a long time, by the way, that the company has had a tremendous amount of cash, blah, blah, blah. And some investors will look at it and say, oh, this is an easy buy, blah, 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 blah. No, not so simple. So you got to look beyond the numbers. So hopefully that answers your question. That's the one I like to talk about a lot. You'll hear me talk about it again. Okay, so some questions about To the Moon. Apparently To the Moon originates. Okay, did not know that. Capital Mindset asking again, why do some people talk about PE when they are talking about banks? And what's your take on looking at PE for all stocks? Well, they talk about PEs looking at banks because actually that's a pretty good, that's a pretty good initial look for a bank. But, because earnings is a good way to actually determine how a bank's doing at the present moment in time. It's a good way. And PE looking at all stocks, you could look at it as kind of like your starter, right? The first thing you look at, the first thing that you peek at, right? It's a preliminary look to look at a PE, but it shouldn't be the full story. And, it's you could do worse. You could use price of sales like some YouTubers, but yeah. And then some YouTubers who claim they don't look at price of sales and have it as one of the first metrics that show up in their software, by the way. A little shots fired there, but whatever. All right, so capital mindset. How come if a mature company like Coke would be a steal if it was trading at a 5 PE, but a bank trading at 5 PE is normal? Well, there's a lot of industry scarring that we have to consider. Also, the risk associated with the different business models, right? Banks have the risk of, their portfolio book, and you're probably referring to Citi or maybe other banks. So banks have some other things that we have to consider that make it a bit more risky, things that are a little bit more difficult to kind of determine the risk, counterparty risk. And something like Coke has basically, it's a consumer non-cyclical, it should do fairly well, consistent sales, it's pretty easy to kind of predict. There's a lot of key things that make Coke attractive as a company, right? Branding power, they're both mature, you're absolutely right. But also with a bank, there's some aspects of a bank that branding, how really important is branding for a bank? Reputational branding, yes, but branding is more important for Coke, and that's in and of itself more of a moat. But with banking, I got to tell you, tomorrow Bank of America doesn't get to offer me, the same benefits, I'm jumping ship. I know some people aren't like that, but I'm jumping ship. Bank of America, don't drop your benefits because I'm out. And if another bank offers me better, benefits for the money to put in there, I'm going to do it, right? And it's very competitive. But there's a lot of industry scarring after the great financial crisis. Fabio, do you know if Warren Buffett uses Jeremy P. rate? Yeah, he absolutely does. Absolutely. Oh, totally. Not a joke at all. He absolutely uses that. 68 P ratio, ignoring the squinting face. Yeah, no. So yeah, that was referring to the case study. I searched Gencor, Sue, got your search results. Yeah. Jen Corsu, you could probably do that too as well. Excited at trying to be smug. I maybe, yes, I'm very excited. Young, innocent, beautiful. Yeah. All right, so capital mindset. If the company has no net income but a gross profit, do you think you would be able to extrapolate out a ballpark potential profit margin in 10 years? Case study, Twilio. No. The thing is, because it's going to be so difficult to do so, it would take first a lot more work. Absolutely would take a lot more work. With the gross profit margin, what we're going to be getting a lot is product detail or detail on the product, right? So the numbers there are going to be telling me a story about the product itself, because I'm going to be seeing that basically if they're not producing a profit, something's going on their operational side that's probably causing that, assuming they have no debts. They're not getting absolutely slaughtered on interest payments. So maybe there's a lot of R&D. So from there, I can kind of derive a story. And I'm going to probably try to see if management has made any statements about that. Maybe selling general and administrative expenses is really high, so SG&A. So maybe that's where all the costs are really going to. Maybe, again, management has some color into that. But maybe share-based compensations through the roof, right? So that's some things I'd actually probably be paying attention to. But no, from there I can tell you okay, this is a very high-quality product, maybe, right? And then I'd probably do further research from there. But in a quick glance, it'd be like, okay, really high margins. Maybe it's a competitive landscape, really high margins. They would probably tell me that software, but could also tell me that the product is in high demand and they're very good at what they do, so they can demand a higher price. So relative to how much it costs them to produce the product or service, they're getting a good deal right out of that. But yeah. I'd have to probably also look at stickiness, like what is the conversion rate? Do a lot of people leaving? So dollar-based conversion rate, et cetera. So are people then spending more? That's actually a really important one. So if people are staying with them and then spending more the next year, that would be a really good one. So to look at. Okay, so I lulled when Everything Money loved SWBI with a 3 PE. Yeah. So this is actually a comment I made. I don't know, Julius, if you were in the call. I know some of you were. I won't oust you, but basically I said on Monday, on the Discord call on Monday that, and I'll share this with you guys here, that Everything Money, they started this like war, and as cheesy as it sounds, they almost recognize this because they actually posted kind of a meme that day, and I was like, wow, did like someone tell them? But no, it's kind of more obvious that like Paul has his faults. He has very serious faults, but he's the one with the platform that is using the platform. So credit where credit is due. Obviously, Capitalize, it doesn't have the platform to go after those guys in a meaningful way, aside from just utilizing them for growth in that capacity. But in a terms of an impact, Capital Mindset doesn't have the impact that something like Everything Money does, going after Jeremy, all those other guys, right? The 5 guys that they're going after. So they're using their platform for good in that sense. But the thing is, they have so many problems behind them as well that almost makes it problematic. One of the biggest problems is the blatant falsehood. I would say it's pretty false. I mean, I'd be very surprised if that is true, that lawyers were telling them not to share the percent allocation of the portfolio on YouTube. I don't know of any regulation that prohibits that unless you're licensed. So yeah, I don't know of any. That would have a lot of implications in terms of people, on any kind of blog out there, even talking about what it is their portfolio is, right? Because you're not charging for a service or anything like that. So that's a weak argument. If they get attacked on there, that's honestly their weak point, and they deserve it if they get attacked on that. But I almost wish, he would correct that and kind of remove that as being a weak point. But that's a weak point, definitely in their argument. And then the other part that kind of irks me about Everything Money is, and I criticize people when they deserve the criticism, okay? As, I should as well. That's why if anyone has one, levy it out. Awesome. So the problem then with Everything Money on top of that is some of their analysis is terrible. I don't know how else we'll say it. I don't know if that offends some of you who are fans of Everything Money. Maybe some of you are, maybe some of you aren't. Maybe because, by the way, most of the viewers on these live streams come after the live stream. So if you're watching this not live, apologize if this offends you. Their analysis, frankly, a lot of times has been terrible. And keep in mind the tool that they've developed is also questionable in terms of quality. I'll give you an example. There are a lot of mistakes that can be made. But an example I think right now is PayPal, right? Go check it out. I mean, kudos to them that they don't delete these videos, right? Kudos to them. So credit where credit is due that, you own up to this. But check out their videos on PayPal. Check out how it's actually evolved over time. Actually, a subscriber messaged me about this. I wouldn't have found out. I can't watch everything. So someone messaged me about this and saying, hey, look at so my PayPal videos in terms of valuation have been fairly consistent. You check them out. Fairly consistent. There might be a minor deterioration, and then so it shows that the accuracy more or less has been pretty good. However, check out their analysis, and it's not really even their fault at that point. It's actually the inherent design flaws of the valuation tool. So check out the update video they made on PayPal. Check out the older video they did on PayPal. Check out some of their assumptions. Check out the outputs. The outputs are vastly different. And so, like I say, I'll say this yet again, there are quite literally infinite ways in which an individual can design a valuation model. Some are objectively worse than others. Some are, subjectively, but some are objectively. Some are okay, some are decent, and some are bad, and some are good, some are great, some are S tier, right? So, yeah, that's all I'll say about them. But, yeah, as far as some of the other analysis, like I said, no one can really determine whether or not Paul's outperformed the market. I'll just take his word for it that he's outperformed the market. He's up 10%, whatever. I'll give it to him on that case. But I looked at his portfolio, his long holdings. I don't think that's going to outperform. And then on top of that, I think I had a great comment from one of you when you guys told me that one thing that also irks you, and I'll voice this out here on the public on YouTube, but this is not, I can't take credit for this insight. This actually is really insightful in terms of kind of pointing this out. By kind of insinuating or showcasing a strategy of like, let's say options or selling put options, which by the way, that's something that I have as a policy. I don't show options. I only have, I think, 2 videos showcasing selling a call option strategy on the channel, but generally speaking, I don't show it as like something that boosts my total returns, right? I'm just actually showing you basically capital appreciation. That's it. I don't even actually include the dividends currently. All right. So I only show capital appreciation, and it's actually even worsened because, you know, it doesn't even show accumulated gains, which is unfortunate. That's why I'm actually going to use a third-party platform so I can show you guys the accumulated gains over the long periods of time. But yeah, that's ranting onto a side point, focusing on this point here, that, you know, showing that or saying, you know, oh, I outperform using a put option strategy. It's not something that is replicable by the majority of people because it requires a decent amount of capital in order to do so. And also selling call option strategies also requires a decent amount of capital in order to do so because you need a decent amount of shares. So it's not something I, you know, showcase a lot on Capital Mindset because Capital Mindset's not for me to brag about how much money to make in a month selling passive income call options. That's not the purpose of this. But, you know, yeah, okay, maybe using all those strategies, he's done pretty well. But I looked at his long portfolio because that's what I was judging. I was judging the investor, the mindset of Paul to actually pick a stock and say, okay, I'm picking a company that is going to do good. And yeah, my conclusion has remained the same. I don't think that the majority of the positions are good, my opinion, but the majority. There are some in there that I like, but majority I don't like, right? If you guys are curious, go check out the Everything Money portfolio reaction video. Again, and I was kind of going off of, you know, whatever information I had, and I used their video to kind of gather the information as to what Paul owns. Another investment he made was CCL. So these are things that are a bit problematic because I don't judge Paul on the I don't even judge him on the amount of money he put in or whatever. I will judge him simply based on the analysis. So the thing is, I can go back to older videos and check out what is the thought process. What are you thinking, Paul? That's what I actually care about. I could care less, you know, your portfolio size. I could care less about, you know, in this case, more so I care more about this in allocation, right? So sure, I don't have the allocation, but I have his thought process at the very least. I can see a glimpse into what he was thinking. And at the very least, I know that he bought that company. So I know that he must have been bullish, right? You must be bullish in order to buy a company, right? So yeah, with CCL, Smith & Wesson, we can point to a bunch of them. And pretty much I'm kind of repeating myself there. But yeah, you guys get the picture. So absolutely agree with that. And, you know, SWBI may be a good company, Raman, but my problem is you need to appreciate the cyclicality of it. You need to appreciate that. That's all I'll say. You need to really appreciate that. Reviewing Stockmo's portfolio. Oh, I mean, I'll take a look at it. I mean, the boys have been trying to convince me to just take a look at it. Well, Chris is adamant that I will fall asleep watching Stockmo. So I haven't to this day, haven't seen a video of Stockmo. It's not an investment for everyone, but it's like a beaten down dog stock with as FE would claim. Oh, financial education would claim. Yeah. Oh, gosh. All right. We're moving that. That's actually a funny comment. What's the hardest to understand part of investing when you are starting out? Hardest? What was the hardest? Oh, what was the hardest? Not like what is the hardest? What was the hardest in the past about investing when you were starting out? Okay, so honestly, the hardest part was kind of getting it to click in the mind that investing is so nuanced that it will change almost entirely at times from company to company, industry to industry. Industry to industry is easier to get your mind around, but even within companies that are in the same industry, at times you have to adjust. Basically, you have to create a unique analysis or look at things from a different approach. So like one bank to another bank. You can't just do the same analysis for both of them. You can do some things that are the same, but then in reality, you got to look a little bit deeper beyond that. So like looking at Citigroup and Bank of America and just going, they should be trading the same. No, they shouldn't, because they do different things, right? They do a lot of similar things, but at the end of the day, they're different banks. What I mean by that is a little bit deeper than on the surface. They're different banks, right? Wells Fargo is a different bank from Bank of America. And I mean on a deeper level, they are different banks, right? Not on like a surface level. Like obviously Bank of America has a sign, it says Bank of America, Wells Fargo says Wells Fargo. They're different. No, not on that level, like on a makeup level of their portfolio. Probably covering themselves if the law changes. Yeah, but if the law changes, it's not retroactive in the United States. So it's not going to be that way. If the law changes, yeah, everyone will have to stop showing their portfolio, which is almost like, I mean, there's nothing wrong with that. If the law changes, all well and good. It doesn't really matter. What it does matter too is people who sell products based off of their portfolio. So if you sell a product based off your portfolio, yeah, you're going to be affected. But if you're making money, aside from that, if you're not making money off of, selling a portfolio, which, could be real, could be fake, could be whatever. But yeah, so that's who it would affect, right? See here. Everything Money proves that they can teach their audience when their own host can't even remember any of the information Paul talks about all the time. I mean, that's another point that I haven't even thought about, but that's like on a different level. Yeah, that's on a whole different level of thinking about it. I could see that. But what I'm saying with Everything Money is they're the hero you got, right? Because they're the ones with the big platform. Strongman doesn't have the biggest platform. He's got a decent platform, but it's not as big as Everything Money's. Let's face it. Let's be clear. It's not 150,000 subscribers. One day, will it be? Yeah. So they're not like the perfect champion to step forward and fight those guys because they have their own skeletons in their closet. That's basically what I'm trying to say. Okay. They have their own skeletons in their closet. And they have a lot of things that the other side can say, well, but this, oh, but that, oh, but this. And so it can, obscure the conversation a lot there. Because I think when in Everything Money's video where they were saying, yeah, sure, I come from a rich person, I don't even think that was really even an argument, right? That's a silly argument, right? Just as you would say that someone is poor, therefore they're wrong, you can't say someone is rich, therefore they're wrong. It doesn't work that way. So I don't know who was making that argument. If any of you were, or if you saw anyone, obviously that's a silly argument. I don't think that's the argument people were making. I think a lot of the arguments were actually around the transparency, and I don't think he handled that well. He just said his lawyers, and I'm like, that sounds, that's a weak point. All right, so, but they're the hero you got, all right? They're the hero you got. All right. So if you already understand the company, then you do a lot more research. Then you do a lot more research than EM does. They're basically value investors for dummies who, and then you get Sven Carlin, Oswath, etc. Well, I mean, but the thing is that they've invested. I know what you're saying, but I'm adding this. Like they've invested off of information that was completely wrong. On this live stream episodes, I forget which one. If someone remembers the episode, feel free to comment it, and I'll show it to you guys. But I did a live stream where someone requested the analysis of Sleep Number. I repeat this a lot because it's a very big problem. Like that's a big deal. Okay. So someone requested, hey, can you do Sleep Number? I was like, yeah, sure, why not? So they gave the context. Part of the context that was given was Everything Money said this is a great company with no debt, and they asked, what am I not seeing here? So we looked through it. I kid you not, and some of you can attest to this because you guys attended that live stream. I remember some of you, and some of you are accountants as well. So you guys saw it with me as we were going through the financial statements. And when we looked at the current liability section, we found a huge revolving line of credit. That's debt, right? So that's debt they missed. They bought Sleep Number thinking they were buying a company with no debt whatsoever because there were no long-term liabilities, absolutely, but that's the surface level. That's just on the surface. And so Paul included that within his portfolio. I think it was Paul or even Seth, whatever. One of them included within their portfolio. No further research than that. Simple. I think it might have been Seth. So yeah, it's a bit of a problem. Do you use exit multiple perpetual growth, both or none? Actually, both in a lot of instances, but depending on the situation. But both are used. They both have problems, but both are used. I made my own modeling spreadsheet from templates from a small channel called Dividendology. There will be so many ways to do it. There's so many ways. Now, some have varying degrees of quality. Some are going to be better. Some are going to be worse. But there's so many ways. Just like literally, I can tell you right now, everything Money's can be replicated in about 15 minutes. I actually did that. I'm not joking. I did it, and I timed myself. It took me about 15 minutes to replicate their tool. 15 minutes. That's all it takes, right? But that goes to show probably the quality of it, right? So again, not the perfect hero, but they're the hero you got, all right? I'm too small. Strongman's too small. We're all too small. They're the ones who chose to do it. Sven Carlin's got the size. He can do it. A bunch of other ones got the size. They can do it. I don't know. It's probably bad for business. So unfortunately. All right. So I don't know. I don't have the answers. I don't have the answers you seek. I'm talking about, whether or not it's right or wrong. All right. I know I'm so late tonight, but great call on the banks yesterday. What a time. I know, right, Steve? That's the worst part. That is literally the worst part. Is like, I literally jinx it each time. And people have been like, this isn't the first time too, and it's coincidental. It's not like I don't have any inside information, far from it. But it's just absolutely terrible how I'm like, oh yeah. So these are the banks. They're doing the market's hurting them a lot. I'm going to be buying some banks, and then I got questions in the Discord at like 12 a.m. I didn't answer them till today. I was like, oh well, you see what happened. It's unfortunate. I'm not happy by today, by the way. I'm actually kind of upset. But I think maybe today will be short-lived. Hopefully today will be short-lived, right? Because I do want to rebuild my positions. I mean, but it's terrible. Like Bank of America up, JP Morgan's up. I only got to buy a little bit of JP Morgan, which you'll see in like the next portfolio update. As per the video yesterday, I added JP Morgan and added to some of my other bank holdings. But I only have 3 bank holdings right now, if you're curious. I actually wanted to buy Wells Fargo too, but psychologically I got blocked there. Maybe I should have anyways, but I was almost like, no, don't want to do it because it's up. Excluding VT Tracker Challenge already began in February or whatever. Yeah. Oh my gosh. That's also funny because he's losing to that. Thoughts on Blackrock as a company? Fantastic asset manager. I don't know. I like Blackstone a little bit more, to be honest, but BlackRock's good too. Different flavors. Blackstone, you're getting like a private equity kind of feel. And then BlackRock, you're getting institutional money in terms of management, like, managing pension funds, a lot of ETFs, all that jazz. So I don't know. I like it. Just think Vanguard, but for profit instead of nonprofit. That's how I think of BlackRock. Rio released a good Q2 shipment data. Will you change your opinion about Rio Tinto? No, I'm holding it. So actually, it's a good opportunity to actually talk about this. So you've also noticed Rio Tinto, BHP, ConocoPhillips have all come down. I think, well, ConocoPhillips is no longer in it, but I drew down BHP and Rio Tinto to where they are today. And Rio Tinto, I'm just going to keep the holding, and same with BHP. They're so small, I'm just going to keep them. That's what I ended up deciding. And so BHP performed really well. Rio Tinto, hindsight, was the one that did not perform well. BHP, we locked in profits of upwards of like 40-something%. Rio Tinto, I think we basically like nothing. All right. So I'm just going to keep them. I'm going to watch them. If we get into like a reversal in terms of sentiment on commodities, like where everyone gets too pessimistic on commodities, I'll take another look at them and then potentially raise their sizing in the portfolio. So think of them as watch positions now. I have not changed my name, but I have not changed my opinion on them thus far. But yeah, I did see that. So. And no, I did not answer that before. Don't even feel bad if I already answered a question. I have no problems answering a question again if I have, if I see that there's in like oh gosh, okay, I got to catch up. Bank of America, Trump's, okay. I got to catch up to this. Mindset, would you rather be an analyst like you right now? Correct me if I'm wrong, or be chief? No, I'm not an analyst right now. I'm not an analyst, by the way. So no, I'm not. Some people out there are going to get this joke. So it's a very small group of an inside joke. And, you'll probably get a kick out of this. But no, Andrew Austin. Wait, I got to do like the stare and like put my hands on my hips. I'm on the asset management team. All right. So that's a joke for like at least 2 of you out there. And if you get the joke, you can comment in, so I can see that you got the joke, and at least it got. Oh, there it is. Okay, so one of you got it. Asset management, bro. Asset management, bro. Yes. Yeah, it is funny. All right. So does the international index fund still? Oh, wait. We got another thing about everything money to kind of finish off this. What's funny is that Paul owns HPQ and doesn't remember why their revenue dropped because of. Oh my gosh, is that true? Oh my gosh, that's cringe. I mean, see, that's the thing. They're the hero we got, though. They're the hero we got. And that was my opinion in the Discord call. That's my opinion here now, recorded on YouTube. That's my opinion. They're the hero we got, and they have their faults, yes. I'm going to back them, yes. And I've actually commented a little bit positively on some of their videos saying I'm cheering for them, because I am. I'm honestly cheering for them because they're the hero we got. They're the ones taking the fight. If I'm taking a side here, putting my taking up a banner, I'm taking up their banner. All right. But I'm like that, in Game of Thrones, I'm that lord who's reluctantly joining the alliance. But I'm still joining the alliance because I think they're like better off being king. All right. So that's why I'm doing that. All right. So we had a question from Eric. Does international index funds still belong in a broad index fund retirement portfolio? What percent? Geez, that's so specifically. It's like, I don't know if that's an answerable question. Do you want international exposure? Do you want it? Because I kind of cite this, and I cited this in the first Capital Mindset course video, that you can get international exposure domestically in the United States. Because a lot of the companies do international business. So, I'll say that, because a lot of that question is so hyper specific. I'm gonna be like a little careful, because also it's not responsible. I know it's not illegal for me to say something technically, because I'm not asking compensation of you, but it's irresponsible, right? And it's on the gray area, to be honest. But so let's get this straight. Fabio, a Venezuelan with an Italian name from a Spanish city, Valencia, Venezuela, by the way. Valencia, Venezuela, because I remember talking to you in the Strongman live stream. Living in Florida, in a mostly Cuban city. No, I'm not in Miami. Pumping TTCF, a California stock. Yes, communism. I know where you're going with that. Will the firm go to zero now that everyone does buy now, pay later like Apple Pay? It could, but maybe not. Maybe there's a place for them. They have a deal with Amazon, right? But Amazon, there's nothing stopping them from doing that. And honestly, that's like, it's all come full circle. Absolutely. I vote for socialist policies. You should debate between them. They would never do it. I'm too small. Like I said, I'm too small. I know you guys would probably like to see that. I would like to do it. I would say yes in a heartbeat, because I have, I'm kind of a neutral base. I have a lot of disagreements with both sides. Well, neutral, I just said I'd fly the everything money banner. But yeah, I'd say I'd have criticism on both sides. I wouldn't voice them whatsoever if I were to do so, because being a moderator, you have that sense of responsibility that you would have to do so. But yeah. Okay, so sleep number. Yeah, I see. You saw the sleep number live stream. I don't remember which one. My problem with every money is that they're either ergos to PE, dead companies, or alter bearers for growth companies. I get the Monish Pabrai 1 PE mindset. They also rely too much on averages. Yeah, but Monish Pabrai has much better picks. Okay, so any updates on AGRD? No, pretty much the same. Pretty much the same stuff. Aside from, looks like that guy, not looks like, the guy did lose the proxy battle, so he's probably going to exit the position. I wouldn't be surprised if he does. You might see some selling pressure. So we need to add the hopes to earning ratio to the model file. Yeah, I actually can create it. It's very easy. I just do a sentiment calculator, divide it by price. Just go nuts with it. Just price to believe ratio. I was not the inventor of that, but I shamelessly stole that term, by the way. Price to believe ratio. We use perpetual growth rate to use a uniform perpetual growth rate, i.e. nominal GDP growth, or you tailor your growth rate to each company, the discount, all free cash flow, or just dividends. Well, you're talking about, okay, so you're also adding an additional point to like oh my gosh, like a dividend discount model, right? So a dividend discount model. And perpetual growth actually changes and fluctuates depending on what, you kind of perceive into the future, right? But yeah, it'd be trending towards what the long-term growth rate of the economy in question, and usually if you want to be the most accurate, by percentage, weighted percentage of exposure of that company in terms of geography, right? So that's how you would be more accurate. But do all free cash flow or just dividends? Typically all free cash flow. Dividend discount model has its place. It has its place. So yeah, I'm not completely against it. My favorite ratio. So he's the creator. I'll just give him the credit. Julius Caesar's the creator because he deserves the credit for that. Have you heard of the YouTube channel Fast Graphs? So Fast Graphs is an actual strategy, by the way. Nothing wrong, I believe, with that strategy that I can really think of in terms of, like, there are some problems with it, but like, you know, it's perfectly fine to use historical averages and kind of compare and extrapolate from that, because that is actually one form of analysis. So nothing wrong with it, and it's a really good, from what I saw. I don't have a subscription to it, but it is a really good intuitive service. I like the for dividend investors. I think it's a pretty good service. I'll be honest, not sponsored by them, but I think if you are of that dividend oriented mindset, it has a lot of value to offer you because you can actually, well, it's very much focused on the historical. So that's the one drawback. So if you don't really care too much about looking at historical performance, it's not really going to give you that much. But I'm a stickler to actually enjoy, you know, to find like those case studies. I guess from that point, it's fantastic. Like you can, you know, do like a case study analysis of a company and probably figure out why it's done so well, stuff like that. But future extrapolation, it's not really good for that because, you know, it's basically just aggregates, you know, analyst estimates, and tries to give you an idea as far as that. But, you know, it's good. Yeah, but no, the thing is, even in the automation part, there's the problems, right? I was discussing a little bit about it, the problems, right? And exactly, you have to understand the anomalies. Based on the companies, yeah, I agree. Like, you can figure out whether or not a company is just way too weird in like first couple bits. So I agree with that. Like, you can go and say, oh, you know, that's not for me, right? This company is definitely not for me. Okay. Learn to invest. I saw their size. They're actually the size that also they could, you know, have skin in the game, you know, fight in this fight, but they're not doing it. So yeah, everything money is the hero you got. Everything money is the hero you got. So my banner is flying high with everything money. All right. Okay. So Jap Gill, new Citigroup price target, $77 for Magna. So I like Magna. So MGA, ticker symbol MGA, you see it in the portfolio. I'm trying to actually build it out. And actually, I might, I'll tell you guys here in the live stream. I'm going to buy some more Magna next week. I'm just going to do it because I really do actually want to hold more of it. I don't know. It's really small. I want to actually bring it up to size. And I think I'd be averaging down at these prices. But yeah, price target, I don't know if I necessarily agree with their price target. I appreciate them for being positive on my investment, but I don't really agree with them. So yeah, buy now, pay never. Yeah. That's the thing about those. From someone who has no finance background, investing requires some thinking, risk, and research, but it's not quantum mechanics. Exactly. Number of experts on YouTube is mind blowing in my opinion. Yeah. And you shouldn't even listen to any of them. All right. Not even me. Like this is my vlog. I just rant on here. Don't even listen to me. Just like literally just come on here, call me an idiot, tell me I'm stupid. Just do that. We'll have some fun. We'll have some drinks. We'll turn this into alcohol mindset. Just kidding. I can't really do that. But yeah. Have you ever done a video on Tractor Supply Inc.? Dan, you speak music to my ears. I love those boring companies. So Tractor Supply, no, I haven't done one, but I would totally do one. So by the way, Dan, I actually want to tell you, I did see the thumbnail you made for me. I thought it was a funny thumbnail. I thought the photo you took was hilarious. And yeah, definitely that I want to do a Cummings video. I think I have done a Cummings video maybe once in the channel. I've done so many videos I forget, but I want to do a Cummings video because, you know, honestly, like I don't care if the video doesn't get views. I want to actually have, again, I want to have the catalog of content. I want to have a part where I've at least spoken my mind on any stock, as many stocks as possible. And if they're good companies, I want to cover them. Mainly because maybe I want to own them. And then doing a video also kind of puts me in a mindset where I also am taking a look at it. And if I'm actually interested in it, I maybe do the preliminary look, do more look. So it makes me just get more exposure to it and figure out for myself, do I want to own it? Because then that actually benefits my net worth, right? If it's a good company, I want to own it. Good for my net worth. I have that incentive. But yes, it is a great story. I would actually do it. Due diligence. How do I generate income? That's a personal question, my friend. Well, let me see here. Let's see. Mrs. Kranz here. She wants the room. All right. So All right. All right. I'm gonna tell my wife. I'm gonna end the live stream. Let's see. How long have I been live for? Let's see. I've been live for an hour and 38. I'm gonna end it at the 2 hour mark. I'm gonna end at the 2 hour mark. So let's see here. Okay, I was answering this question. Sorry about that. So I was answering this question. Well, right now I'm doing a bit of a change. Won't get into that because this is public. So yeah, it's not good practice to talk too much about work, but someone could find it if they really wanted to. My name is out there, so you can just find me. But as far as right now, technically speaking, it's actually just my investments. Technically speaking, for this brief duration in time, it's just my investments. But yeah, I'm giving you the technical answer, technically. And like the meager amount, I'll tell you guys how much YouTube generates. Like YouTube generates like a couple $100. Whoa, totally can live off that. But yeah, so there's still, for all intents and purposes, like basically chump change in all the realist respects. I mean, you know, it's not the glamour you think it is, if you're being honest, unless you grift and you go sponsors, which I've actually been contacted by sponsors, but you haven't seen them because I'm only sponsored by my sponsors. Check out the sponsor, the IRS, the SEC, the FTC, etc. All right, so I'm in asset management. Yeah, oh, yes, you did get the joke too. The qualm of discounting all free cash flow, not just dividends, and adjusting shares at the end of the balance sheet. So you will factor in free cash flow as a shareholder. You will not see like stock. Is that you'll factor? There are ways to get around it. So because you're talking about double counting, yeah, there are ways to get around it. They're fairly complicated, and I know that there are. I would never. I'm just going to tell you straight up. I am not going to disclose how to do it. You can probably find out how to do it. I'm not going to disclose how to do it because technically speaking, that would help out certain channel how to do it. So I won't talk about that. But I'll tell you that the information can be learned, and you know you got to get a little bit creative with math, but it is doable. It is doable. I think I understood your question. I don't know if I misread it, but I'm trying to catch up to the bottom. All right, another asset management bro. Yeah. So I love how some of you guys got the joke. Screaming in fear. Asset management mindset. Will Cummings' video be exclusive to Fabio OnlyFans? Yeah, if you didn't know, I am starting an OnlyFans. My wife just stared at me and it's like, you better not. By the way, I am going to cook the steak. If you want some steak. You want steak? I'm going to grill it. All right, you'll think about it. My wife's a vegan, by the way. Yeah, you are vegan. No, I'm just kidding. She's not vegan. Don't worry. All right, so Cummings thumbnail, PG. No, you'll end it at 5 a.m. Yeah, no, actually, Julius told me that I'm ending it at 5 a.m. now, so I'm ending it at 5 a.m. Capital Mindset, what do you think of AOC saying, look at that? Yeah, okay, what, hey, Colt. I think that was a wonderful statement, and I agree with her message. Capital Mindset, thank you for being on the chat. I did with Andrew Manor and Julius. Appreciate the support. No, absolutely. I support you guys. You guys tell me about something, and if I have the time, of course I'm going to be there. All right. And also, I was asking some questions about being CPA. You'll never be sponsored by the Chinese government with what you say about them. I found out 2 weeks ago that Alibaba is my second largest holding. I didn't actually even know that until I saw a video saying that it was. So then I found out that I invested a lot in Alibaba that I didn't even know that I did. And then I found out that I think Chinese companies are really good. So that was all new to me. So then I had some self-reflection, and I was like, geez, when did it get so carried away that I invested all this money in Alibaba that I had no idea that I did? Huh. Well, you guys who get it, you get it. All right, so where do I sign up for this OnlyFans? Down in the description below, where you can see my OnlyFans. You get access to all my photos. I only post feet pics though, so could you imagine? By the way, I'm going to cook the steak. Is how Fabio tells his wife. Oh my God, Cole. How do you feel about that? No comment. Fabio, where is your background? This is Rio de Janeiro, the city where my wife was born. So that's actually the reason why. She forces me to shill Brazil. That's our other sponsor, the Brazilian government. So check out our sponsor down below, the Brazilian government, where you can find out how to make cheesy bread. What else? Brigadeiro. You can also, farofa, some farofa. Caipirinhas, what? Matcha? Machi. Okay. Anyways, that's basically what you can learn down in the description below. Promo code CAPITAL. All right. Promo code CAPITAL. Okay. What? Capital 10. Capital 10. All right. I might make more money with my OnlyFans. Actually, yeah, it'd probably make more money than YouTube, to be honest. They don't want you to know. Yeah, they don't want you to know. So, yeah, I know that you guys actually like the city-based backgrounds. So Fabio, doing a Cummings analysis with Brazilian wife in Florida beach. I love the comments from you, Kathleen. You're like Venezuelan with Italian name in a Cuban-dominated city, which I'm not in Miami. If I was in Miami.
No, this is Brazilian dominated.
Yeah, it's Brazilian dominated. This place is Brazilian dominated. There's too many Brazilians. I'm just kidding. No, yeah, it is a lot of Brazilians. It is a very Brazilian-dominated community, I can tell you that. Brazil is famous for capivaras. Is that true, Thaisa?
I don't know about that.
She was going to come on here, actually, another Capital Mindset Live with the wife, to actually complain about Apple. But I guess she'll do it next time.
Can you ask them if anybody has had bad
Oh, okay.
service experience?
She's asking me a very serious question to the live stream. All jokes aside, have any of you had very bad customer service with Apple? I've never had customer service experiences with Apple. I never had a problem, but she's having a huge problem. She found out that Apple, you said Apple switched, but no, they switched to a third party. That's all I'm saying, right?
I didn't know that. No. It's just like,
Oh, you don't know.
I don't know.
Well, she's having a bad experience. I mean, does anyone had a similar experience? All right. Fabio's monthly YouTube is the same as a Crunchwrap Supreme combo. Yeah, it's garbage, right? It's garbage. I mean, if you guys want, I'll show it here. Like, it doesn't matter. If you use my thumbnail, my fee is 1,000 Voyager tokens. All right, I'll 100% pay you 1,000 Voyager tokens. Have you looked at ABEV Brazil? So ABEV Brazil is that's. You have a friend who works for them? All right, I want insider information. So ask her. Ask her if she can toss you the envelope and then have the envelope passed on to me. And just kidding, because if you check out our sponsor, the FTC and the SEC, they can prevent things like that. So check out the comment down below for our promo code for the SEC and the FTC, promo code CAPITAL10. All right, jokes aside, all right, but yeah, I want the inside information, please. Have it on my desk by Wednesday. All right. But yeah, what have I thought about them? Well, they really dominate the drinks market in Brazil. They're always on that Big Brother show that you like. Big Brother, by the way, is the most watched TV show in the entire world. 100 million people. The Brazilian one. Yeah, she's right. It's almost like you should be on the show right now. What are you doing? This is like the equivalent of backseat driving. Like when your wife's just on the side, just like making comments, but not involved in the stream so people can't see you. Oh, she's too tired. That's what she says. She's too tired. On the next one, you have to be on here. Otherwise, this is the equivalent of backseat driving, all right? Which she's not guilty of. She doesn't actually do that. She's actually a really good backseat driver. Anyways, but yeah, they really have a profound presence in Brazil. And I think, aren't they Anheuser-Busch as well? AB InBev, yeah, they're one company, I'm pretty sure. Yeah, so you could have exposure to them through Bud, but there's some weird. So that whole company is like weird. There's so much weirdness in there, but I don't really like the involvement of 3G Capital. I'll just tell you that. All right, so promo code CAPI. Oh yeah, I forget. Actually, the promo code's CAPI because it's almost like Capital Mindset, but not really. All right, is it just me or the market is crazy? Even Wells Fargo got destroyed on earnings and still went up 6% on the same day. Is everyone and their grandmother buying the dips? Or am I missing something, Fabio? Well, we did buy the bank dip a little bit. The only one I didn't get to buy Wells Fargo. I bought a minuscule amount of JP Morgan Chase. If you go watch the video from yesterday, I go into it a little bit. And a little bit of Bank of America, because I'm still building that one up. But like I'm upset by today. I'm not happy. And the reason why is because everything is just so happy because Citigroup kind of reported and it was way better than expected. The market's kind of just digesting. what the results were. Remember that markets are forward pricing as well. So, again, if you're going off of old information, if you're looking at CPI and all that jazz, and where are things going beyond that, right? But yeah, just
Ethan is a creep.
who?
Ethan, look at his comment. He's being a creep.
Oh, he's not being a creep. That's classic male joke. She doesn't understand us boys, right?
If you saw it, it's creepy.
The Cummings?
Yeah, the last time.
No, you don't understand. Cummings is a company. He's putting two things together. All right. Keithan, my wife is upset by your joke. I'm not upset by the joke. I understand the nuance there. You see, but look at this. Brazilian dominated is even better title for your OnlyFans exclusive video. I agree. That'd be an awesome video. I'm getting some gaming questions. You guys secretly know I am a bit of a gamer. It's a game that I have been playing around with here and there when I have the time. It's called Ready or Not. I don't know if any of you ex-military guys have played it, because it has actually a really big community of ex-military guys, ex-SWAT guys that play it, that take it super seriously. And you basically are a SWAT team and you're clearing room to room. And supposedly it's the most realistic video game of its kind thus far. So check out the game and the sponsor below. I'm kidding. Enough of that joke. But in all seriousness, I like it. It's a fun game. But we'll get to that because there are some questions about it.
Make a joke of the company Siemens.
Oh, yeah, Siemens. Yeah, Cummings and Siemens. Yeah, no, these companies ask for that. Well, Siemens, their name comes from something else, but it's almost like they're asking for it, right? There's a meaning behind it, but asking for it. So, you could probably make a joke. A whole bunch of companies out there. There's a company called Rick. Do you know about a company called Rick?
Yeah, we talked about it.
We talked about it?
Yeah.
Oh, yeah, I talked to her about Rick.
We talked in the live.
Oh, we did talk about it on the live. That's right. You know about Rick. Would you buy Rick? You don't want to profit off of male...
Because now
off
people
of...
are creating strip clubs on the metaverse.
They're creating strip clubs on the metaverse, so you see disruption. Yeah, okay, so...
No, not Rick, but there's people who are...
There's people disrupting it. All right, so... my mouth is watering because I'm thinking about steak and... Yeah. Fabio, I'm making this weird? Hey, I'm not the one bringing up Cummins and... what was the other one? Siemens? I'm not... All right, so... can you shill one of Brazilian food? Okay. Brazilian food, your favorite? Go. Come on, something, any of them. You love a lot of them.
Arroz e feijão.
What the fuck? What?
Rice and...
Oh, rice and beans. Really?
No.
That's the one. No. Pick something that's really good. Picanha. I'll pick for you. Picanha. Yeah, but picanha prepared the Brazilian style with farofa, black beans. Right? Yeah, that stuff's amazing. That's what I want right now. I want some rice. I need some beans. Then the steak. All right. Let's check out this. So, can you check out channel Asian Metri? He makes phenomenal videos on ASML. I'll check him out. I'm trying to catch up to the live stream within the time we have, but I'll check them out in a separate. All right, so we have some options. My Apple experience in person though was very good. Gave my wife a student discount without us knowing. Was it online customer service?
In person is always good.
Yeah, in person it's phenomenal. Online customer service. That's what I should be particular. What? Well, you've given your opinions on Vale before. Vale is the company that your dad was invested in the past.
I know it used to be really good when I lived there.
Yeah,
I don't know
once
how
upon a
it's doing
time.
now.
Yeah. She has no comment really on it. In reality, so you're so grounded. What does that mean? I'm grounded. Oh. Cummins' new ticker is Skeet. As a stock guy, I love. Read the comment. I am actually going to start not a gaming channel, which by the way, check out our other sponsor, Gaming with Cole, the YouTube channel that is dedicated to gaming, where I was a guest speaker for a Pokemon game, unless that audio got messed up. I don't know anything about Pokemon, so it was actually kind of funny that I was with Cole. We were just talking, shooting comments here and there, and it was I don't know anything about Pokemon, so I was like, oh, okay. But yeah, check out the actual game that I'm interested in right now, which is Ready or Not. That's the game I'm interested in. All right, you play any horror games? PC, Resident Evil 8. So yeah, we're basically getting to the point where we're asking some fun questions here. But I think someone asked me about whatchamacallit, best Fallout game. Sad, really sad. I've only played Fallout 4, and I didn't really like it. I couldn't really get into it. I was actually into Elder Scrolls. I talked with Chris Strongman. He was huge in Elder Scrolls 5 Skyrim, and I was kind of big in Elder Scrolls 5 Skyrim. I was really young when it came out, and I liked it. I gave Fallout 4 a try. It wasn't the same thing for me. Maybe it, okay. But I know Fallout 3 and New Vegas. New Vegas is usually everyone's go-to favorite. Horror games, I actually, okay, so let's see. Outlast. Yeah, that's pretty much it. I don't really play too many of those. I really like some tactical shooters. That's pretty much one of my favorites genre. And then I like some, ones that are like epics, like big stories, like think Witcher 3, stuff like that. Something that, if I want to play a video game, I want to be like, almost like watching a movie, but interactive movie. Okay, so sponsor link. I never edited that part, but I'll get to it eventually. Oh, yeah, it's funny. But edit it, so put it out. I just basically shilled you, and you don't even have the video ready, so people can't even watch it. All right, so I think Cummins is actually a great company. No. All jokes aside, I agree with you. That's why I want to do the video on it. I think it's a great company. Dan and I were talking about this in the live stream that is not public anymore, unfortunately. But yeah. What about Rick rolling is? Yes, I do. Yes, that is the meme. I am not that uncultured. Titanfall 2 best shooter. I agree. Titanfall 2 is very underrated, and because of the fiasco with Titanfall, the first one didn't do so well, unfortunately. Elder Scrolls 4 with Elder Scrolls 5. Yeah, I can see that opinion. Yeah, because Elder Scrolls 5 was hand-holdy. I know. We'll see how Elder Scrolls 6 is. You play chess? Yes, I actually was on the chess team. Chess team in high school, but whatever. But I do play chess. I'm not the best, but I play chess. I like chess. All right, so I was also on debate team. Yes, I was a bit of a nerd. I cringe. All right, Skyrim is the greatest game ever made. Absolutely. It was very good. I mean, looking back, a lot of things were bad, but like the story, like the freedom, like that's how I look at video games. Video games are like a movie that you kind of interact with, right? Then there's movies. VR games are getting interesting. Blade and Sorcery. Look up YouTube videos of that. That's where video games are heading, man. That's where video games are heading. It's insane. All right. Imagine what it's going to look like in 10 years from now. All right. I showed my wife Blade and Sorcery. So when you guys go check out that video on your own time, I showed my wife Blade and Sorcery, and she was like, meh, I don't see the big deal. And I was like, what? She's like, yeah, it looks stupid. It's like, what? And it's like literally the guy who's, in the real world grabbing some guy by the neck and just like stabbing a sword into their face. And I'm just like, that is the coolest thing I've ever seen. She's like, I like Sims. That's what she said. She's like, basically, I just tell her about a cool game. She just spits and you spit in my face, babe. That's how it feels. That's how I really feel. I'm just kidding. Your brother plays FIFA. Yeah, I know. Bullish on EA because her brother plays FIFA, by the way. All right, so ask your wife if she likes the song. Do you like it? Yes or no?
I don't know Desafinado, but I do like Águas de Março.
She doesn't know the first one. She likes the second one. Capital Minds, if someone got arrested for insider trading, they bought 100 call contracts on Cummins, but it turned out. Yeah, that's cool. That's cool. Serious question: does your wife have any insight on Ulta Beauty? Yes. Do you have any insight on Ulta Beauty? By the way, some of these people are dying to see your portfolio, which I know you don't want to show, but you'll never show. Okay, that will always be a secret. Only the references I give here and there of the holdings she has, but yeah, that's fair. She doesn't have a YouTube channel or anything like that. But okay, so what are your thoughts on Ulta Beauty? Come on.
Again, I feel like women that like makeup are divided into two teams, basically. There's the Ulta team and there's the Sephora.
Okay, Ulta team and Sephora team. Women are divided into two camps. Ulta team, Sephora team. Okay, what is the stereotype of the Sephora team?
It's like the bougie.
The bougie team. Okay, Ulta?
It's more like the practical.
Practical. So Ulta, more practical, Sephora, bougie? Sephora's owned by LVMH, by the way, which is actually fitting with what she's saying. Would be on brand. I don't know this, but
a lot of people also choose them because of they have different rewards programs.
Different rewards programs. Okay, so different strategy in how they engage their customer.
Yes, but they're always competing. I mean, they both give birthday gifts.
Okay, yeah, that's standard though. Okay, so you see, it's almost like backseat driving. I'm telling you, it's like she's.
Really like, it's a personality thing. Like,
but this is all separate from it as a business.
Affordable than Sephora.
Ulta's more affordable than Sephora. Okay.
They have they offer products they're like in different price ranges. Sephora.
Okay.
It's too more expensive.
All right. Well, so that's like a quick categorization.
I can try to learn more and let you know.
Yeah, I mean, go inside of an Ulta. There's actually one close by. Oh, you been? But I want you to go inside more. Now, this is a serious. This is your job now. Over the next 2 weeks, I want you to go inside Ulta every single day. If you're working, I don't care. You drop work, you tell your manager, you say like, look, I got to go to Ulta today. They say, why are you going to Ulta? Don't worry about it. You say that to them. Don't worry about it. You drive to Ulta, you go inside, you take pictures, follow women around. Follow women around.
I did that in college.
I know, but
Did you know that was one of my projects?
I know, you told me.
To follow people in a grocery
Well,
store.
who was your teacher who made you do that? Was his name Jeremy? Was his name Jeremy? No. Oh, yeah. So she's saying that in her college class, her professor made her go to grocery stores and follow people around. Sounds a lot like someone. I'm asking her if her was your marketing research professor Jeremy. Is his name Jeremy?
Her name was
Woman.
Rita.
Well, we've seen pictures of Jeremy's capable of transforming. He's capable of transforming at any given moment into a woman. We've seen pictures. We have photographic evidence.
Was a woman in her 50s.
It's a woman.
blonde woman.
Okay. I'll let that go. It wasn't him, but in all regards, I want you to go into Ulta and follow people around and see what they're buying. That is your mission for the next 2 weeks. And I want a written report with photos, and I will present it to the Capital Mindset community. And then we will compare Sephora, and I will just assume Sephora is amazing. That's what I'll do. All right. Someone's trying to trigger me. All right. So Capital Mindset said you picture on the Discord, react to it. Wow, that's quite commanding. It depends on what it is, Cole. If it's like an OnlyFans picture. Oh, I don't know what this is. Okay. All right, guys, I'll show you this photo. You are viewing a single common thread. This is why billionaires shouldn't exist. At a certain point, it makes zero difference in your life, and you are just hoarding money from society. Well, that's not even how it works, but hoarding time and resources, you mean? Every dollar is labor and supplies that could be used. Actually, instead, they use it to keep score. I mean, well, Cole, the only thing I can comment is that these are two poor individuals, not poor as in monetarily poor, but poor in the mind, that don't understand what money even is. So, yeah, they're lacking that kind of nuance. So you can't even have a conversation with them about that. I don't even operate. I can't understand them even on any level. I don't even know what to say. But yeah, I reacted to it. So that was for this comment. Sounds like a few product check to me. Yeah, exactly. That's what it sounds like. 97 more K subscribers than Capybara Mindset. Yeah. So Thaisa, did we reach 3K? If we reach 3K, that's pretty cool. But yeah, on the 100,000 subscriber mark, if we ever get there, who knows? But I'm gonna keep doing YouTube for a while.
Oh, you did reach 3K.
I did reach 3K. Heck yeah, we reached 3K. We reached 3K. All thanks to you guys. All thanks to you guys. By the way, I don't do this enough, and I know you guys. You guys even remind me to do it, so I'll do it. I'll be shameless about it. Don't forget to like this video, like the live stream if you haven't liked the live stream, and I won't be apologetic about it. I'll be stern about it. Like the live stream, okay? Because I'm presumptuous that it provides value. I'm just kidding. No, but if it provides value, if you're liking it so far, like the live stream. All right. So anyways, yeah, at 97K subscribers, I will get a capybara. We'll figure out how to get it. We'll get it somehow. No. They have apparently a bunch in the state of Florida. So like we're good. We'll find one. All right. We will find one. We'll make it happen. Elf is that bargain bin gas station makeup. Maybe that's why Jeremy likes it. Maybe. But actually, my wife told me that at one point Elf was actually providing good value for what it was. Really? Remember that? You told me? Like there was a genuine change happening?
But their prices increased.
But yeah. So they became a little bit more expensive, but yeah. And this is exactly what I'm talking about. You stock them. All right. Okay, so you'll wear the capybara costume. That's what you're basically promising me. All right, I need to go to an Ulta shop and act like... yeah, that will be a different kind of vibe because, it's predominantly women and, you're just following someone around, filming them. Yeah. Got into finance. He only play one on YouTube. Yeah. Yeah, I'd agree with that. I want photos of Spider-Man. Yeah, that's true. All right, Capital Mindset. Speaking of Jeremy, as a girl, so see my latest video if you want to see cosplay stepsis, my epsis. Oh, okay. So let's actually pull this up. All right, so let's actually see. Fake alias. There we go. We click there. We click videos. Okay, Millennial Money. Is it the Millennial Money one? All right, I'll bring it to a close, but if it's the Millennial Money one, I'll bring it up. So I'll keep this here until I get the response, the confirmation. Capital Mindset. What are your thoughts on Netflix? On the Netflix Microsoft news that Netflix is switching over to Microsoft. Good, because don't get mad. I think it's good because there's a inherent conflict of interest with AWS because Amazon does produce content, and so all well and good. So I think that's good. Great reaction. Make it a video. Do people really want to see my reaction? I could comment in the live stream. Do you guys actually want to see my reaction to really silly Reddit comments? If we do it, Cole, it has to be like you have to show them to me. We'll do a video. Us together, you'll show them to me. I'll react to it with you. You can ask a witty question about it, but yeah. Invincible's a great show, Cole. My eyes saw your comment. All right, so gotta make a baby and head out. Make like a baby. I read that so wrong. Yeah, that was a wrong way of reading that. I gotta make a baby and head out. That's how I read it. What's your opinion on Robinhood? Their stock is tanking. Do you think they will go bankrupt? Let me see. So Hood stock. So if we take a look at Hood stock, people are pointing out their cash pile, but the thing is, the cash pile is meaningless as long as their operations are still where they're at, losing money hand over fist. So let's actually take a look at this for a second. So yeah, Hood is doing that. I'd have to do an analysis on them, like actual video. So I'll leave it to that. I'll do an analysis video on them. Can't wait to see an FE product stream in PDVSA. Is that ticker? Are you saying PDVSA, the petroleum company of Venezuela? It might be. I texted that to you, Fabio, and you didn't watch it. Fake fan. Oh no, then I already seen the video. Yeah. I need the capybara cookout. Oh, so you want me to do a barbecue while in a capybara outfit? Absolutely, we can do that. Amazon did make a really good show, Invincible. All right, I'll close it off soon. Okay, so let's see here. I'll do this one last thing as terms of reaction. Okay, so you're saying let's do it. Just text me and we'll set that up. You could do a portfolio reaction to Ross Gerber. Okay, boom. So that's a portfolio reaction request. It's been a while since I've done one. Ross Gerber. I kind of did a mini one when I was talking about in the Ross Gerber versus Peter Schiff debate videos. So yeah. Let's see here. Okay, so all right, so kind of. Oh yeah. We are doing a live stream on Strongman Personal Finances channel. So yeah, I am pitching it to my viewers now. Cole, chill, fam. All right, so let's do this. So when we use forward PE, are we supposed to use 2022 since their year isn't done, or 20? No, it's the forward 12 months. Forward 12 months, and an analyst will do an aggregation of that. But forward 12 months earnings. So don't forget. Yeah, I already said that. I want capybaras to be the subject of the cookout. You know what? Why not? I mean, like, look, if it's a 100K video, look, it can be like literally whatever. It can be as goofy as it wants. It's celebrating a moment. So I'll be dressed in a capybara outfit, cooking meat. You won't know if it's capybara meat. It could be capybara meat.
No, I would not allow
She wouldn't allow it. Okay, so it won't be capybara meat. But I'll have a capybara somehow. I'll probably go to a zoo, maybe. Maybe it's easier to go to a zoo and then do the cookout rather than, because it'd be weird. How are we going to get one for a day? We'd have to adopt a capybara and, yeah, we'll figure that out. No, we can't get a fake one. It's got to be the real deal. We can't just put the cat into a capybara costume. That'd be torturing the cat. I just spent 1 hour on this. This was hilarious. Thanks a lot. Hey, absolutely, Raman. I'm glad you enjoyed it. I think you were talking about this. You should have seen the 9-hour live stream. You would have enjoyed that one. Oof, like leagues more than this one. Leagues more, right? That was super interesting. I will do another like really long live stream on a date, but I'm going to start it in the morning and end it at nighttime. I'm not going to do that again. That was horrible the next day. But I will definitely do one again. And then I'll have anyone who wants to come on, of course, within reason. I'll see if, you guys are, doing weird stuff and I won't let you on, but, all right. Capital Mindset, Jimmy Learn to Invest, portfolio reaction is still coming. Yeah. It's actually still on the, list. So I'm going to set it up to vote. I haven't had a vote in a while because I've been trying to catch up to stuff, but I'll have a vote on the Discord server. And then, that if it wins, it wins. All right. Okay. Someone said they want to eat capybaras. You guys check out the Morningstar Women Empowered ETF. I heard Jim Cramer's number one stock is charitable. Oh my gosh. All right. She'll send PETA to your house, she said. All right. Featuring Fufat. Yeah. Obviously, I loved having you guys on. Hey, how you doing, Kingdom Finance? You coming on? All right. Clutch wife is clutch. No capybaras will be harmed. LOL. Yes. Everyone in general section on the Discord now. Oh, is something going on? Are you guys doing stuff there? Let me see. What are you guys doing? What are you guys doing in there? Oh. What are you guys doing? Let me see. Oh my gosh. Oh my gosh. Oh, that's a funny meme. That's a nice meme. I'll laugh at it. That's good. That's good. Oh, someone actually shared something, a sector breakdown or something. Okay, SP5. Oh, okay, Dow Jones Industrial. All right. Anyways, good morning from Europe. Hey, McBuddha T, you're just waking up. Yeah. See, that's the thing about the Capital Mindset community. If you guys didn't know, we are. Let's use the buzzwords. We are a very diverse community here with many people spanning across the globe. No, quite literally, we actually do. All right, so let's start closing off here because I'm gonna start. I'm literally hungry. We're gonna go cook some steak. All right, so Capital Mindset. React to Ali's World of Stock portfolio. Yeah, sure. I didn't even know this guy. Who's this guy? Ali's World of Stocks. Ali's World of Stocks. There's so many YouTubers. What the heck, man? Inclusive is the word I'm looking for. I'm inclusive. I'm very inclusive. Yes. Corporate speak. I'm inclusive. We need to know about the new thing at your new. Oh, yeah. Kingdom of Finance. We need you to reveal everything. I think that was directed towards you. I don't know if it was directed towards me. Good evening from Albany, New York. Yes. Capital Mindset. What's the story, bro? What was the story, bro? Yeah. Oh, JP and Julius. I mean, I'll do. Out of curiosity, I might do like a Discord call, and then you guys let me know, and I'll try to set up a Discord call in the general or something, and we can I can show you guys. Julius actually kind of already knows what it is, but yeah, I see you guys are now just typing in the Discord here. Does it feel that there's still no real pan? Yeah, it's not. Well, I don't know. It's been a decent amount of, I guess, pessimism regarding it. So it's like if you go back Capital Mindset videos since about like really they got, I guess, more concentrated on that topic in about January. And you see how the difference of YouTubers were saying like, oh, it's like really positive, blah, 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 blah. And then, we were like, oh, liquidity crunch is coming, blah, 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 all that jazz. And now where we are today, you saw some of the other YouTubers like saying, well, we're in a liquidity crisis, blah, blah, blah. So like sentiments definitely has changed. And I talked to a lot of you guys in other live streams or in Discord calls about how them being so negative makes me almost feel like I want to be a little bit more positive, right? So anyways, taking a look here, Capital Mindset channel with global reach. Yes, we are a cap. Okay, so last comment. Like the live stream, everyone. We have 47 viewers right now, and we only have 29 likes. Only 29 likes. What is this? What is this? Right? That is my compensation is the like button. All right, so Capital Mindset explain why stocks didn't crash while the CPI went insane. Tysa, pick an ice cream flavor. Chocolate Trinity. Because the stores ran out of Chocolate Trinity. That's why. That's funny. I mean, remember, I didn't know until just the other week that my second largest holding was Alibaba and all that jazz, but whatever. All right, so Deep Throat, no. All right, guys. Thank you guys so much for watching. It's been great. We had a lot of jokes in this live stream, more of a chill one. This kind of covers the, I guess, news updates, stuff like that. But yeah. I know, okay, one more thing, because this is a great comment. Data I'm giving is not based off of feelings. People are still in equities above average levels. Outflows were higher in the 2018 correction. Psychology hasn't changed in 3 years. No, look, I'd agree with you. It's just like, that's why I'm saying like, all that I had to go off of in terms of like a change in sentiment is, that's it, change in sentiment, like a feel for it. But like, there isn't any concrete data saying that we're out of a liquidity crunch by any stretch of the imagination. Like, for example, we're not even declared an official recession, right? So, I mean, all I'm going to do is still doing what I've been doing. Is I might have like some strategies. Like I have as far as the rules go, I show you guys all the stocks I have that are publicly traded stocks. Maybe like divergent strategies like TTT doesn't show there, especially because I don't want to be responsible for anyone getting involved with that. And then like how I might be switching, and I will be doing a switch at some point to maybe TLT to get exposure to when I believe rates are going to go to the downside, something like that. But I do have some positions in there that I don't make videos on because of their size, like micro cap size. So I think it's irresponsible for me to do so. But if anyone asks, I talk about it. But I do have one in there, and I'm going to reference it in like a distant person because I don't want to, But anyways, that's I have some positions that would be or benefit in a turbulent time. So I think I'm comfortable with that thus far, and I'm just going to be acquiring assets that I like at prices I like. That's as far as the publicly traded stocks go. So, and by the way, if the bad case scenario does happen, that stock should do pretty well, and I could be able to deploy that into the other companies that I like. So. All right. Yeah, that is it. So sorry I couldn't give you like a more detailed answer, but I just wanted to cover that because I'm going to head out now. All right, guys. Thank you guys so much for watching. I will see you guys, more of a relaxed live stream than anything, but still pretty fun. I'll see you guys in the next one. Bye. I'll see you guys tomorrow at 11:30. Remember, like the video, liked it. All right. See ya.